trading doesn't have to be extremely hard. And that is why I created this entirely free price action trading course that will show you how to go through and trade my style of trading, which is price action trading on the E-mini S&P 500 futures contracts. So I'm a price action scalper. I trade one thing, which is the ES, and I trade it on one time frame, which is the 2000 tick chart. If none of that really makes that much sense, don't worry about it because you're going to learn about it in this course. So I go through it all step by step, and this will take you from having no knowledge of trading to being able to trade. It will also be good for traders who've already been trading and they just want to find a better way to trade. So if you're not profitable or you're having a challenge with consistency or anything like that, this course will go through all of that. Now, what I did was I actually put this course together by taking sections from my actual paid course and just making them available for free. So I have a version of this course in my completely free school community. You can click the link in the description below to join my completely free school community. You can get access to everything involved and you'll be able to go through step by step. Now, in the school community course, which is a lot of the same sections here, there are extra sections in the free school community course. So if you want the full version of that, you can join and you can get access to the entire price action course in there. There's a couple of extra sections and different things that are not included in the YouTube version just because of length and things like that and formats and whatnot. So you'll get extra sections when you join that. There's also live streams and different things that we're doing every day in there. And then there's a paid version of the course that goes through literally everything, step-by-step strategy, everything involved for day trading, and you can see that as well. So when you join the free community, you'll see that, and you can check out the paid community as well. The links are in the descriptions for everything involved. So without further ado, I'm just going to get straight into the video. You'll be able to go through, and I'm going to have the intros in there from the school versions and everything like that so that you can see the format, how it's all laid out on there. And then it will go straight into each one of the videos. And then I will have everything labeled in the chapter section so that you can navigate around, check everything out. There's live trades included. There's just a lot involved here that will help you become a much better trader. So I'm looking forward to seeing you in here so that you can learn price action trading, what that all means and how that looks. And I will see you on the inside. Welcome to the course. I'm so happy for you that you're taking this step. This is going to be an amazing journey. It's going to be long, not the course, but the actual journey is going to be long, but very rewarding. And so I want you to understand that finance, trading, it doesn't have to be so complicated, even though it is extremely hard. And I'm going to preface this by saying trading is simple, but it's hard. So that's just a crucial thing to understand here. It is extremely hard. If it was easy, everyone would do it and everyone would be millionaires. And that's just how this would work. But that's not the case. Trading is hard, but it is simple. So we're gonna figure that out as we go. And that's gonna all make sense as we go through different sections of the course. So we're here to take our power back and give ourselves financial freedom. That's what this is all about. Being able to generate the freedom to be our own boss, to run our own life, to either make extra income or turn this into a full-time career like I have. And so that is what this is all about. It is all about maximizing our potential and doing what we can to thrive in this space. And it is very complicated. There's people that will tell you, and when I say it's simple, trading is simple if you do it the right way, but it's complicated as an industry on purpose, I believe. I think that finance in general has been overcomplicated. Never mind. I'm not going to go down a rabbit hole. All right. So who am I? My name's Nick, and I am an entrepreneur. I grew up with I did not grow up with money. I grew up pretty broke. To be honest with you, I lived like most of my childhood in a trailer, and I was broke, and that's just how it was. And I put myself through college and whatnot, but none of that really matters. Like, I eventually became an entrepreneur. I ran an agency. Built up the agency. I sold it, all that sort of stuff. I'm also a father, and I've had a lot of different life experiences. And now I'm a full-time day trader, and I just focus on trading the E-mini S&P futures, the ES. That's what I trade the most. I also will longer term trade stocks and cryptocurrencies and things like that. Now, I'm not a financial advisor. I'm not some certified financial advisor. I'm not some guru who's going to promise you the world, because this is going to take a lot of your energy. You're going to need discipline. It's going to take hard work, time, and definitely patience. And I'm an impatient entrepreneur. So I dedicated myself to learning this career after exiting my prior career. It's been challenging, but I've learned a lot along the way and I've spent a lot of money to develop my knowledge. I've made mistakes. I've had hard times in this space. I've done a lot of things that I'm hoping to be able to help you avoid so that you can get down the right path much faster than I did. And that's really what you'll hear from a lot of traders who are successful. It's an amazing time now because of how many resources we have at our disposal. But there's when you're first learning this, you go through a lot of trial and error, and there's a lot of just BS out there. So this is really I've taken courses, I've paid for indicators, I've paid for software, I've read books, I've traded all different assets, I've tried all different methodologies, you name it. Traded with bots, traded manually, with and without indicators. After all this, I ended up realizing there's a lot of ways to be successful in this space, and there's even more ways to lose money in this space. But I found that simplicity is the ultimate winner, and that's why I talk about being simple here. So you have to learn how to trade with a style that's based on your personality. And this course is going to help you figure out what that looks like for you. We're going to identify that, but also I'm going to show you exactly how I trade and why that works with my personality. And then what things you could be doing that are adapting my system to your own personality. So I want to make sure I specify that. But remember, I'm not a financial advisor. I can't promise you anything here besides that I'm going to teach you everything that I know to help you be successful in the space. I'm not going to try and act like I invented everything that I'm about to teach either, because I've put together things from who I've learned from and all that. But after I started learning from others and I found people that were really good, I realized there was kind of a learning gap for me in how to actually do this stuff, even after buying some courses, books, trading manuals, etc., memberships. I've definitely learned the most from Mac, who runs priceactiontradingsystem.com. So I would definitely recommend checking him out. Their membership is pretty cheap. At the time that I'm recording this, it's like $125 a year for their membership to their website. And there's a whole section of paid learning materials with videos and stuff on there. And then also they have a PDF manual for how to trade price action that's $100. So, all in $250, and that is what you can learn. You can learn pretty much all that stuff. Now, that has been the best thing I've paid for in my experience so far. And I still watch Mac's daily videos. And you'll notice my style is very similar to Mac's. I learned a lot from him, and it's just it works. I've tried all kinds of things, and what he teaches definitely works. It's what works best for me, and it's what I've come back to over and over again. Now, I have nothing but gratitude for him and what he's done. And so I definitely recommend checking out his website, going to check out his YouTube. He does the free daily chart videos, and you can learn a lot from Mac. All that being said, I still found that there is a learning gap in how it's all taught. A lot of Mac's materials are older, at least 10 years old or more, some of them. And so I just think that there's some different things that are helpful now. There's different ways to learn this. And so even though I learned through him, it took a lot of my own trial and error, and I'm hoping that this will accelerate the process for you with this course. So I also have Al Brooks books. I haven't done his course, but I have the Al Brooks price action books. I think they're over here. You can kind of see. So I have his set of books over here. I also have some books on trading psychology. This is my favorite by Jared Tendler, and I will go over that in a later module. And I have some other books that I've read and whatnot too. That but really, like, I find that simplicity is going to be best here. Learning from this course, and then maybe learning from Mac and what he teaches, and then also that those two things combined will help you learn price action trading, which is what this is going to be all about. And then I think that, these books on market psychology will help you, but you don't need to read them yet. A lot of those will help you over time. So we'll get to those in later sections, and I'll go over some more things there. Now, I've also tried learning from some other price action traders. Not going to mention their names because I found it not to be that intuitive. And so the ones that I've mentioned, I like. Now, again, I haven't taken Al Brooks' course. I just have his books. They're very, extremely hard to read. Um, I'm not even going to say that I really recommend them, to be honest with you. I really only would recommend Mac's stuff because I've traded with his system and it totally works. Now, the thing is, this course is going to focus on price action trading. It's not going to focus on how to build strategies that use indicators or trade with bots or that sort of stuff. Now, I've done some of that before, and we have other courses that will roll out that will teach those things. It's way different. So I just want you to understand that there are many different ways to trade, many ways to be successful in this industry. This is going to cover a specific aspect of those ways. Now, the thing is, when you learn price action trading, this stuff will carry into every type of trading. It will help you become better with any system that you eventually use because you'll understand how to read charts. And that's the important thing here. So my goal is for you to be able to take this course and then be able to trade the way that I do every trading day. And I want you to be able to do that without having to go through all the frustrating ups and downs that I went through along my way to get to this point. It's not easy, but it is simple. Can't stress this enough. You're going to hear me say this. It's going to sound like a broken record, but I will tell you, I'm going to repeat myself throughout this course and I'll repeat myself on my daily videos because I found that sometimes you have to hear something many times when you're in a certain state of mind for it to really stick. And that is something that I think is true. Like, there's things that I learned from some of Mac's videos over the years that I heard him say probably 20 times, and then finally it clicked. And so that's important. This course is meant to be revisited. You don't want to just take this course one time. You want to go through the course, and then after you start trading, you want to come back to sections of the course, maybe even go through the whole thing again, because you'll find that as you go through this more than once, there will be things that click the second, maybe even third time that didn't click the first time because it was all new. So I just want to kind of talk about that as well and specify that it's not a one and done. You should revisit a lot of this stuff. There's going to be really valuable information here that will affect you in different ways along your journey. Okay, so this is all about dedication and grit. You'll be pushed to examine yourself in this business. In my opinion, becoming a successful trader will make you a better person overall because of how much you have to examine yourself and get real with your own flaws in your own psychology and mental state. It's a requirement that you go through and understand your own psychology, your own flaws, your own mental state if you want to improve yourself to improve your trading. So you will become much more self-reflective. You will become much more self-aware as you go through this. And I think that becoming a better trader, I really do think that when you become a successful trader, it usually means that you have become a better person overall because you have learned how to understand your own emotions, how to process things more reasonably, more quickly. There's a lot of benefit that you get from this type of examination. An important thing to note is that I'm going to add more modules and sections to the course over time as I get feedback, questions, context. I'm going to update this over time. So this isn't going to be like a course that it comes out and then that's it. Over time, if I think that, hey, I covered this one particular area, but there's a lot of extra things that I can put in play, or there's maybe a video that I did or some sort of thing that came up, a question that kept coming up, I'm just going to add more. I'll add another video, I'll add another module to the course. And so that is going to be a cool thing over time here too, is that as things develop in the space, I'll add things in. If there's certain assets we want to cover, if there's certain market events, things like that, it's worth putting those in and showing these things. Or maybe there might even be a time later on where I record some live trades, and maybe I add those to certain sections and all that sort of stuff too. So there will be some things that get added over time. And so it's important to check on the course over time as a resource and see what new things have been added because they might help you on your journey. So this video is already getting way longer than what I originally planned for the welcome, but ultimately I just want to say, hey, thank you from the bottom of my heart for, trusting in me to learn from, and I really do I really do want you to be successful in this space. That's the whole thing here. I want you to become a successful trader with the path of least resistance. I want you to learn from the things that I've experienced that have been painful. Now, I will say there might be some painful times in your trading. There's going to be some hard stuff that you have to go through with your psychology when you start trading, but this is going to help you mitigate a lot of it. And that's the whole point here. So, I'm going to wish you the best on your journey, and I'll see you in the next video. All right, everybody. So let's get into the course overview, the table of contents here. So basically, this is going to be the table of contents. Now, one thing I do want to, before I even talk about it, I'm going to tell you that, and I said this in the welcome, but I'm going to say it again. I will be adding more modules and sections to the course over time as there's feedback questions and areas where I just think we can add more context for learning. Maybe there's things that we see over time, or maybe when we're talking about, let's say, when we get to this section where we're talking about market structure, maybe I have some day where I see a really good learning opportunity, so I record my chart live, and then I might add that video to the market structure section later on. So I'm going to cover everything in depth, but there might be some extra things that get added over time. So I just want you to know that there will be some new resources that will help you on your journey over time in the course. There will also be more courses that get added to the platform. So I just want to call that out. But let's spend some time here on the course overview and the table of contents. So basically what we're going to be doing here, obviously you already went through the welcome, and now this is the introduction section. So we're going to be going through these sections. What do you need for this course? What do you need to be able to trade? What are we trading? Setting up the chart, the importance of goals. So the introduction is all about what kind of things you're going to need. Like this is literally things like computer, um, time, things like that. We're going to cover that sort of stuff. What assets we're going to talk about in this course that we're trading. Now, there's many things that you can trade, but we're going to talk about what we specifically trade, how we set up the charts so that they look like my chart for as you go through this, the importance of your goals, and then we're going to go into the sections of trading psychology. So you'll find that this has I start off here with the intro and showing you how to set up the chart and what we're going to be trading, but then it goes right into trading psychology before we even learn about reading charts. And the reason for this is that psychology and your own mental game is going to be what really pushes you forward in this industry. Yes, the strategy is important. You have to have an edge. You have to have a way that you look at the market that gives you an edge so that you're not just a 50-50 trader. You do have to have that. And that's important, of course. But that's not all you need, because even when you have an edge, you can still destroy yourself with your own psychology if you haven't worked on it. So we're going to go through the trading psychology section first, and that's going to help you get in the right mindset for learning everything. And I highly recommend that you come back to the trading psychology section later on after everything else, after you start trading, especially. So we'll go through that. We'll go through the dangers of promiscuity, the benefits of mental toughness, personal psychology and trading, mindset, daily practices, tilt. We'll talk about tilt. We'll talk about psychology, reverse chart analysis, trading in the zone, which is a book, and the mindset around that. The mental game of trading, which is another book. We'll then go through some of the final thoughts around that. Then we'll start getting into price charts. What is a price chart? What are Japanese candlesticks? And how do we look at volume? What are time frames in trading? What is the price action? What does that even mean? Because that's what this course is about price action trading. So what does that even mean? Then we'll go into the trading principles and overview. So this is where we're going to talk about things like market structure. And if it doesn't make sense now, that's okay, because it will make sense when we get there. Market structure, context and time frame analysis, longing and shorting, types of orders that you can have, types of trading that you can do, stop losses and take profits. We'll go over some of the specific things that I do there. We'll go over levels. So levels will include support and resistance, trend lines, moving averages, Fibonacci retracement, zones, and then we'll talk about indicators a little bit. Again, this course is not going to be focused on indicators, but we'll talk about them just a little bit so you understand what's going on there. We'll then, and by the way, with indicators, there will be some other courses that do use indicators. It's just that this one, the only indicator that you're really going to be using is a exponential moving average. So that's just a little sneak peek. We'll then get into things like advanced market structure context. So trends, ranges, and reversals, which is more advanced. But that's going to be like the advanced price action. So understanding how to trade trends, how to trade ranges, how to trade reversals. Then we're going to get into some of the execution, things around the risk reward and risk management, how we actually execute trades. We're going to talk about trade management, which is looking at runners, which is when you have contracts that you leave on to try to get more out of. Measured moves and targets. We're going to look at that as well. So how you track how far to let your runner go. Then we're going to get into the price action rules. Now, the price action rules are putting, a lot of this is where you're going to start putting things together. So you're going to understand signal bars, range rules versus trend rules, and how to identify those. Entering on pullbacks, second entries, hidden second entries, when it's acceptable to take a first entry. Now, if you don't know what I'm talking about when I say second entry, first entry, don't worry about it because you're going to learn that later. Breakout pullbacks, failed breakouts. But then we're going to look also at reversals and counter trend setups, failed second entries and traps, and then context. Now, there's other traps in here like failed breakouts and things like that, but I'll talk about that as we go. But failed second entries are some of the best traps. Then the context around all that and the context of the chart. And then we're going to go through putting it all together, how to really just like open up a chart and understand what kind of day we're having. The putting it all together section will be pretty helpful after all this. And that's why this all goes in this specific order. There'll be some live trading examples that also come up that help you also put this all together. Then there will be a refinement section that talks about daily trade reviews, how to analyze your results, and then the conclusion and final thoughts of the course. And basically, there's going to be some recommendations there and things like that. So that is how this is all structured. It's largely really like 10 large sections is kind of how this is put out. The introduction is, obviously the welcome is its own section, and then it kind of goes from there. I try to keep it pretty simple here. And again, there will be some things that get added over time. But for now, this is what we got, and this is going to be our framework. So I will see you in the next section. All right, everybody. So what do you need for this course? You really just need an internet connection. You can do this course on your phone. You can do this course on a computer, a tablet. Doesn't really matter. Whatever you access the internet on. I mean, you could start this with just a phone. That's really all you need to take this course. I will say, though, you're going to get a lot more out of it if you have a computer. And specifically, you're going to want to have it. It doesn't matter what kind of computer to take the course, but you're going to want a Windows computer of some sort, probably a laptop. In the next section, we'll go over exactly what you're going to be needing in order to really take advantage of the course and to actually start trading. So this section is just me talking about what you need to actually take the course, but there is going to be a discussion around what do you actually need to trade after the course, and really you'll get more out of it during the course as well. So for the course, again, all you're going to need is an internet connection, and you can even do most of the course just watching the videos on your phone and all that sort of stuff if you need to do it that way. The first time through, that might actually be totally fine. But then as you go through it again, you'll probably want to have your computer set up so that you can be trading and then you can reference the videos and all that sort of stuff. So for the course, you just need an internet connection and a way to watch the videos. And then you'll want to go into the next section where we talk about what else you're going to need to get the most out of this. So, what kind of system requirements you're going to need and all that. So, I'm going to cover that in a lot more depth in the next video. But for now, just know that you will need to prepare eventually to get a laptop if you don't already have one that runs Windows 10 or 11 or better if this comes out later and there's some better version, but at least Windows 10 is the oldest version that you can run in order to run a lot of the software that you're going to need for trading. So you will need to have a PC at some point for this. Um, there's people who claim that you can trade on a tablet or a phone, whatever, but I don't recommend any of that. I trade on a laptop. I use personally a ThinkPad. I'm really into the Lenovo ThinkPads. So I have a ThinkPad that's really high end, but you don't need a really high end one to do what we're going to do. The only reason I have a high end one is because I had it from my last career and it required me to do a lot of advanced computation that you won't have to do in trading. So I'm just I can tell you that like when I've traded before on a like $200 refurbished ThinkPad and it was totally good and it worked perfectly great. So just want to call that out and we'll talk about this more in the next video and we'll go from there. So I'll see you in the next one. All right, so what do you need to be able to trade? Now, this is kind of a two-part thing because it's a combination of what do you need to be able to trade and also like what do you need after the course to be able to trade the style that we teach. So it's kind of two things. So let's start with that. You need NinjaTrader in order to trade the style that we teach, specifically the style taught in the course. Now, you don't need it necessarily. You can trade with other platforms, but if you want to be able to do exactly what I'm doing in the course and have it look the same, I'm going to be using NinjaTrader in the course because that's what I use. So the course is going to be centered around showing you the NinjaTrader charts, and that's how this is going to work. But you can use other platforms, so I'm going to talk about that. Now, the thing I like about NinjaTrader, I have the lifetime one, which is $1,500. But when you're getting started, you can do it for $0. Now, there's a caveat there. You probably have to pay a data fee, which is like a monthly subscription. It's like a few bucks, $5, $10, something like that. I think it might be $5 a month or $10 a month or something. And that gets you real-time data, which you will need. And anyway, so you can get started for $0 with NinjaTrader, pay as you trade with no monthly fee. The problem is your commissions are going to be terrible, but that doesn't actually matter in the beginning because you're just going to be sim trading. So you're going to be trading live data with fake money, with a sim account, a simulator account. And so you're not actually going to need to put real money into the platform you don't want to risk your real money. You want to trade with a simulator account. And so you can do that pretty much for free with NinjaTrader. So I wanted to call that out first. And then down the road, when you start trading with real money, you can swap to one of the other membership plans. Okay, so now let's take a look here at some other options besides NinjaTrader. AMP futures, I've used them before, and I've used multicharts.net. The cool thing with AMP futures is if you fund an AMP futures account, they'll give you access to a bunch of platforms for free. You can get a free TradingView account for trading. The thing that here, I haven't used a bunch of these. The TradingView, I use it for my own charting, for like Bitcoin and stocks and stuff, but it is terrible for actually trading on. It is absolutely terrible for what we do, and it will not work the way that I trade. So I want to call that out. I did test this a while back. Multicharts will work. Multicharts.net is basically a platform like NinjaTrader, and it has a lot of the same type of features and the same sort of bracket orders and automated trading strategies that we would use. So I will say an automated trading strategy doesn't mean we're trading with bots. It just means that there's a way that we enter trades that automatically places our take profits and stop losses and all that stuff that I'll go into later in the course. But multicharts.net is a platform that does this very well. So if for some reason you don't like NinjaTrader, you don't want to use them, um, AMP Futures is a good option because once you fund an account, you can get these platforms for free, or you can pay for something else like a TAS, which I've never used, Sierra Chart, which I've heard good things about. There's a few different things, and that CQG, it's using CQG for the data feed, is what that means. So this is a possible option. You can see here, there's demos that you can try. So if for some reason you just really want to use one of these other platforms, you can use AMP futures for that. Um, they do have low brokerage fees that tend to be pretty much around what the lifetime ninja fees are for your commissions. So that's the benefit of using AMP. You don't have to buy the platform payment in order to get low commission structures. Their commission structures are pretty low. So they can be a good option for people who want to start with a low commission. I don't know what their all in cost is. They say they'll match or beat any other quote. So they will probably give you a slightly cheaper commission than Ninja, but I don't really care because it's going to be pretty much almost the same as what this is. And I have a really good, I like Ninja Trader. So, anyway, my bias is towards Ninja Trader. I've used multi charts though, and I've used the other ones, and they're just not as good as Ninja Trader. So that's it. I'm just going to tell you straight up. I think that your best bet is just to use Ninja Trader and just to go with that. I think that you're going to get the best option there, and so I just think that you're going to get the best out of things if you use Ninja Trader. Sorry, I had to pause for a quick second there in the video, so there might be just like a weird second there, whatever. But I just find that Ninja Trader works best for me. So I think the easiest solution here for the course, my recommendation would be just use the free version and simulator and just go with that for now. If you watch my videos, also if you watch Mac's videos, who I recommended in the intro, he uses Ninja Trader as well. He uses AMP futures with Ninja Trader, but you have to be grandfathered in from like 2015 to do that. And I think when I was using AMP futures, it was like 2018 or something like that. And I wasn't grandfathered in to use Ninja Trader with AMP futures, so I can't actually do it. So he uses AMP futures with Ninja Trader, but again, you had to have been grandfathered in a long time ago for that. So I just use Ninja Trader brokerage with Ninja Trader, and that's the way I do it. And I can tell you, their system requirements are pretty basic. You want obviously the recommended, so you don't want the minimum. You want the recommended, and it's pretty simple. Just a solid state hard drive, 8 GB of RAM, 2 GHz processor, and you do need Windows 10 or newer. And so I wouldn't look at this, whatever this is. I would say Windows 10 or 11 or newer, and then these requirements down here. And just for an example, that just means you're going to need a PC, probably a laptop. So I went here and just typed in refurbished ThinkPad, and I filtered down for the minimum 8 GB of RAM, at least Windows 10 Pro, and at least a 2 GHz processor and a solid state hard drive, which is what they recommend. And you can see you can get these for so cheap. I mean, I'm not going to endorse any of these. I don't know. Here's one for less than 200 bucks. And there's a bunch of different options here. So even if like you don't have a PC, or let's say you were a Mac user, yes, you can, there are options for Mac. You can run Parallels and run Windows. I do not recommend any of that stuff though. It will be super laggy in my experience. And if you are a Linux user, like there's ways to do it, but I would recommend just using a PC, running Windows, having it go that way. And you can see like you can get ThinkPads for really cheap. I use a higher end ThinkPad, but that's because I've had one from my other business. But I've traded on ThinkPads like this before. You can get these super cheap refurbished ones. I mean, you can even go to a local shop near wherever you live and find something. It doesn't have to be a ThinkPad. I'm just showing as an example. These tend to get refurbished a lot of the time, and you can get them for really cheap. So, and the reason I say a laptop might be a good option is just then you're not confined to only using it in one place. If you already have a desktop or your own laptop or whatever, then you're probably fine and you don't need this. And you don't have to use a ThinkPad either. I was just want to throw it out there as a possible option because you can get them for cheap. They're easy to work on. You can find refurbished ones. A lot of people work on these things, and it will meet these system requirements that you need for running Ninja Trader. And that's really all you're going to need to trade. You don't need a fancy setup to trade the way that I trade. I only trade one chart, and so you don't need multiple screens. I typically do run a second screen, but that's because I record videos and I like to have Discord on a separate screen. So what I actually do, I don't have it in front of me right now, but I'm just gonna pull it up. I think it's like called like laptop. I'm just gonna type in like triple screen. something like that. Some Basically, I have like one of these type of things. I don't know which brand. I can't recommend a specific brand because I don't remember which one. I think the one I have looks like this. I don't know. This isn't. I don't think this is the exact one, but it looks pretty much almost the same as this. Mine might be slightly different than this one, but this looks basically the same as what I run. And so I run like one of these with my laptop. And so basically I have my laptop and I run one of these when I'm traveling. At my house, I just have one big screen and then my laptop. So I only have two screens at my house because my screen is so big that I'm using right now. And so you don't need anything super fancy. You can do I like to have a second screen though, just because I like to have like Discord and my school community and just a couple of things on there. I like to have like my Ninja Trader like uh toolbox thing over there. And I just keep all that on the second screen so that my main screen is just my trading chart. But I don't even need this, and if I'm just trading, I don't even have Discord or school or any of that stuff open a lot of the time. I'll just close out of some of that stuff if I need to, and I'll just run my laptop. So in that case, I'll just have my laptop and I don't need another screen. I don't need anything really, because you don't even need that stuff up while you're trading. But sometimes you might want it. Like I like to have my second screen. I like to have YouTube on there so I can listen to music, my YouTube music, or like whatever. And I just keep that all on different screens. So just calling it out. Some nice to haves would be a second screen or that trifecta screen thing. Um, but you don't necessarily need it. You just need a laptop that can execute. I also have, when I'm at my house, a mechanical keyboard and a like pretty responsive mouse that's all plugged in, and that's it. But you don't need any of that either. You can use, if you like working off the trackpad on your laptop, you can just use that. So you might need a mouse or a keyboard or whatever. You don't need anything special. You don't need any of these crazy things that can make it so you press a button and it executes trades for you. You don't need all that stuff. So just letting you know, for this course, for the way that I trade, you don't need any of that. I know that there's people who trade with a stream deck and all this other stuff. You don't need any of that for this course. You don't need any of that to be a successful trader. I mean, some people might teach a system that uses that, but you're not going to need that here. So I just want to let you know this is getting longer than I originally planned, but I think it's important to talk about the fact that you don't need all this fancy stuff to be able to trade. You just need a simple computer that can run NinjaTrader to trade futures. And if you trade other assets that aren't futures, you might need something even less than that. Like, for example, when I'm trading crypto or stocks, I don't even need to use my computer to do that a lot of time. I can just execute it from my phone. However, that's not what we're talking about here. In this particular course, you're going to need a PC and NinjaTrader to make the best out of this. So just wanted to call that out. Hopefully that answers all the questions that you're going to have. No, you don't need to go buy a new computer that's super advanced or anything like that. You just need something that can run NinjaTrader, and the rest of it's going to be relatively cheap and or free to get set up. And you are going to be trading the simulator account. You're going to be trading a sim account. So you don't need to fund an account with a bunch of money. You want to trade with the simulator, a demo account, a free demo account that's trading fake money, but with real live data. So you will need the live data subscription through NinjaTrader in order to do that. So you'll see when you go to set it up, you need to have live data. You need to trade the simulator with live data in the real time market hours, not this market replaying data. You need to trade real time as if you were going to be sitting down and trading the real market. So I want to stress that, and I'll see you in the next one. All right, everybody. So what are we trading? We are trading this, the E-mini S&P 500 futures contract, also known as the ES. And it will have these other little codes, ESZ. These little third letters are just to signify what contract is being traded because it's a continuous futures contract. If you don't know what a futures contract is, you're going to have to go and do some research on that. I'm not going to sit here and explain everything. It's not options. It's different. It's a continuous futures contract that we're going to be trading. You can see here, here's another one on it. I'll link to these as well. You can also just go to the good old YouTube here, and you can do what is a, let me see if I can find a decent article. Here you go. What is futures market explained? I mean, you can see here. I'm not going to watch these, but you can just go to YouTube and search for what is a futures contract. This one will do a good job of explaining how futures work for commodities. What are futures? There's so many people who've already done videos on this, so just go and do some research on what a futures contract is. You can also see more information about it here. Literally, just go to Google and type in E-mini S&P 500. E-mini S&P 500 futures contract, and you'll find these articles. This is CME Group who runs all this. So I'm not going to sit here and go through the whole website, but I'm going to tell you that's what I trade. I trade the ES. And it's very similar to if you've ever heard of people talk about SPY, SPY. That's the contract. That's the contract that is the that's the stock index that is basically the same thing as the ES. It's very similar chart. There's some slight differences to it or whatever. It's not a futures contract technically and all that, but it's basically the same movement, and it's the S&P 500. And we're just trading that. That's all we're trading. That's all that I am going to be teaching in this course. Now, there's other things that I have traded before or that I do trade and all that, but this course is focused on this. Now, the concepts I'm teaching you, they can work on other things. So maybe you want to trade crude oil, CL futures. I've traded that. Or NQ, NASDAQ futures. You can trade that. You're not going to use the 2000 tick chart for that. You're probably going to use something slightly different. So when we get into how we set up our chart, 2000 tick, you're going to have to find a relevant value. Like the 2000 tick chart is probably, for the ES, is probably about the same as maybe an 800 to maybe 1,000 tick chart for the NQ, the NASDAQ. For crude oil, it's something more like a 400 or 500 tick chart. It's just based on the volume, so you'll have to see. But the ES is pretty much the most liquid asset out there that you can trade, and that's why we like it, and that's why a lot of what we're going to teach works so well. When you start getting into less liquid markets, things will fail more. It's not as predictable, so I just want to call that out. This is what we're trading. We are trading the ES. Do some research on futures on your own. Read about them, understand what they are, how they work. There's some tax benefits to trading these instead of options. You don't have to worry about certain things. I'm not a financial advisor, which I've already told you, so not financial advice. This is for education, and you have to do your own research in all this. But the thing is, you will be able to go and learn about the futures market and just go from there. And so we've already talked about it a little bit. I'm not going to spend too much time in this video. I just want to let you know that's what we're trading. And I'll see you in the next one for setting up the chart. All right, everybody. So this is going to be the importance of goals. The importance of goals and setting goals. So I don't have anything special here. This is simply an idea of how you can look at things. So you can use whatever you want for this. I'm not going to build some kind of a tool for this because it doesn't really matter. You can, honestly, I think that the best thing to do here is probably even just to have this like a journal, like a handwritten journal, something like that. And we'll go over that at some other point. But what you can do, and this is just to kind of show you how to format something. So you can have your date, right? So let's just say that it is 10/17. 2024, 10, 18, 2024. You can have your dates. I did not want it to do it like that. Whatever. All right. You can put in your date each day. Okay. You can have a date for the day. Why? Just why? I thought that Excel was going to do that for me, but everything is just totally falling apart there. What are you doing? Why? Come on, man. All right. Sorry about that. Okay, so you can have your date in here. And what I think you want to do is have basically something like this. So this is just going to be an example. Daily. I'm going to call this daily target. All right. So okay, so this is your daily. This is just an idea. Um, Now we're gonna go. Now you can put this. You can literally write this down. You don't have to have some sort of special Excel if you don't want to do Excel. You can have a Google Doc. Google Doc actually works pretty good for this. Google Drive, because then you can access it on your phone easy, and you can just put this stuff in. You don't need to do this on a computer. Whatever, you can go in and journal about your notes. So what you would do here is, like, let's say for example, um, you made $97 that day. Maybe you only made $20 this day. Maybe you made 150 this day, something like this. And you just keep track of results, how you're doing each day, okay? And the idea here is to understand what your daily target is supposed to be. Maybe in the beginning it's only to make $100 a day. And you start with this and you put notes here on what happened, whatever. Took two, took two trades, both wins, took 2 wins and 1 loss, something like that. And you can just put in here. Now, if there's something significant, like, maybe this 150 was a good thing, but maybe at the same time you kept trading. So maybe you put, like, over traded and got lucky. Because what I want you to do, and what I think is important, is having a daily target and stopping for the day when you're done with that target. Because what will happen a lot, and this is the case for mostly every trader I've pretty much ever talked to, when you start getting profitable in the early stages and you start to understand your strategies and you have a good system, what can happen is, let's say your daily target's $100, right? And you come in and it's 10, and you just trade and you make $450, right? But your daily target's supposed to only be $100. You could easily have a day then where you make. And now what? Now you've now you're negative 50 on these 2 days. And so what happens a lot of the times with traders is that they will keep trading after they hit their daily goal, because they just think that they want to get as rich as possible, as fast as possible. But you have to resist this urge. You have to be disciplined and wrap up for the day. Now, this especially becomes true when you start trading with real money. When you start trading with real money, you need to have a daily target and then be done with that and go back to the simulator if you're going to keep trading. Because you can still have some learnings there, but it's psychologically damaging if you keep on trying to trade and you have a day like this, and it will cause a lot more harm than good. So what you do is you eventually start to increase your daily targets after you have hit weekly targets. So this is a daily sheet. You can make a weekly sheet. You can do it however you want to do it. But what you can do is you can basically have another sheet that's just, weekly. And you can do, like, I'm just going to write 10-18 and make this like the week ending 10/18. You can even week ending. So this is a Friday. Weekly target. Let's say your weekly target based on $100 a day, it's $500. Weekly actual, and let's just say that you hit your target exactly, right? And then for the notes, you don't necessarily always have to have notes here, but you can just have this as a tracker to see, are you on track? and you can even have a what is your actual minus your target, right? And so I'm not gonna put that in there. Let's say your next one is here, here, and you actually made, you actually made $520. Now you're actually $20 over your target. Right. And then, so this will help keep track of what's going on. That's another way to do it, just for having weekly targets. And what you can do is over time, you can start to change your targets and add to it as you are proving out and staying disciplined on your results. We're going to get into the psychology and everything, but every successful trader that I've talked to will tell you that you need to have a target. And once you hit your target, you have to be done. And you have to slowly and sustainably increase it over time. So you don't go from having a $100 a day target to a 200 to a 400 to an 800. You don't do it like that. You start to slowly increase. You might go from 100 to 150. You might go from 150 to 200. Maybe you go up in increments of 50 at first. Maybe once you get to 300, then your next target becomes 400, and you do it like that. And you can start to increase it a little bit further, but you don't want to be like, all right, I'm going to double my daily target, because it's not going to work for most people. So unless you're doubling it from like, $20 to $40 or something. But you need to be careful with this, and you need to have some tracking in place that can help you with this. And realistically, the reason I'm even talking about all this is that you need to understand that it's very important to have a goal that you adhere to and start to achieve, and then you change the goal slightly, or you have steps to change the increments so that you can keep achieving the goal. Because psychologically, it's good for you if you achieve the goal that you set and you achieve the milestones that you set for yourself. And I can't determine these for you, and I can't give you a roadmap, because it's going to be different for everybody. And this is a personal journey that you're going to have to go through. But you need to do this. And the other thing is with goals that I'm going to cover here is you need to be realistic about what your goals are for your life in this endeavor. So some people have careers, and they want day trading to be just a part of like side income, separate money, whatever. It's hard to do that, by the way, unless you have the type of career that allows you to have a few hours of time each day to day trade. So for example, if you're on the West Coast like me and the market opens at 6:30, but your regular day job, you don't have to be there till 9 in the morning. And let's say you have to leave your house at, I don't know, 8 in the morning. Well, that means that you probably can get up early enough, 5:30 maybe, and you can maybe trade from 5:30 to 7:30. And then you have to get off, get ready, and leave and go to your regular job. Now, if that's the case, you have significantly less time than most people to dedicate to this. And you're going to have less, it's going to take you longer to learn as well, because you're not going to be able to sit there and simulate and trade the demo account from, 5:30 in the morning until 1:30 in the afternoon. Like, you're not going to be able to do that. So your learning curve is going to be a little longer. You're not going to have as much screen time. But you can still do it. You just have to be realistic with knowing, hey, it's going to take me a little longer to get the experience that I need to be successful in this, and that's okay. And because, yeah, you can do market replay after hours and you can do all that stuff, but it's not going to teach you that much. What's going to teach you is trading live data, trading the live market with the simulator account. So you need to have real hours that you can put into that. So if your goal is side income, just know that it's going to take you a little bit longer, and that's okay. But you have to be realistic with that, and you have to be realistic on your goals with that. And the other thing to consider is we're learning the 2000 tick chart here. So it is the case that this price action trading will work on larger time frames. So you could trade, based on an hourly chart or something much larger and use the same methodologies. You're just going to have to look at things a little bit differently. So I do want to call that out, by the way. Now, if this is to be a career, then you need to be realistic on your goals there too, and know that, hey, I'm going to have to put in a lot of hours here. I'm not going to be able to just spend an hour a day and become super successful at this in 6 months. It's just not going to happen. You're going to need a lot of hours of screen time for this to be successful. So you need to have goals for how much time you're going to put in as well. What are your daily goals for how much time you're going to put in? And then what are your profit goals going to be? And you need to start with having those profit goals on the simulator account and base that on what your realistic perspective is going to be. So, for example, if you know that you have $500 that you're going to use for your trading account when you go live, then you should set your simulator account to $500 and you should trade with a $500 simulator account and see how much you can grow that account before. Don't start your simulator account with $20,000 when you're only going to have $500 when you start trading. You need to be realistic and trade the simulator like it's real life and be realistic on your goals and only start to trade real money way down the road after you've had many, many, many hours of success and proven that you can do this. And even then, I usually recommend, even if you have $500, that you start with even trading way smaller, trading with micros or whatnot, trading the micro, the MES instead of the ES. So we'll get into that later too. But just be realistic on your goals, hold yourself accountable. It's going to be so much better for you over time if you do that. If you just go in without having goals or having unrealistic expectations here, then you're just going to burn yourself. And so I've just seen it happen. It's happened to everybody that I know who's a profitable trader. And so that's it for this video. That's it for the introduction section. Going into the next one, we're going to start getting into trading psychology. And I'm really excited about that because we already started to kind of dip our toes in the water with some of what I said here. But the trading psychology piece is really crucial. And so that is going to be coming up next. So I'll see you there. All right. Well, welcome to the section on trading psychology. Now that we've made it through the welcome section and the entire introduction and setting up your chart, we're now going to take a break from the chart and actually just spend some time talking about our trading psychology. Now, I can't say this enough, but this section is so crucial to your success in this industry, regardless of what strategies you use. And what we're going to teach in this section will stay with you in all aspects of your life. It will also help you if you trade different strategies in the future. Mindset and your personal psychology, trading psychology, and understanding yourself is going to be crucial to your success in life and anything that you do. So this is a really, really important section. And what I want to say about this is that after you go through the trading psychology section, it is important that you come back to it. And I'll say this throughout the whole course. It's important that you do the course more than once, in my opinion. But also the trading psychology section will become more relevant to you after you actually start trading and get some time on the charts. And you'll want to come back and review it. And you'll find yourself probably doing some of the things that we talk about. And then you can correct them through some of the practices and some of the education that is provided herein. So the next section of this is going to be talking about the danger of promiscuity and the benefits of mental toughness, talking about then our personal psychology and trading, mindset, daily practices, tilt, psychology and reverse chart analysis, then a couple of books, Trading in the Zone, the mindset around that, the mental game of trading, and then I'm just going to give you some final thoughts on the section afterwards. So let's get into it. I'm looking forward to the next section here, and I'll see you there. This section is on personal psychology and trading. Now, before I get into it, I realize that I've rearranged a few things in my office, and you can see this tank next to me. I have a pet ball python named Alice, and she is in there asleep right now. Yeah, so you can't see her. She's inside of her hide, and you can only see part of the tank. But I know someone's going to ask me, what is that? And so it used to be upstairs, but I moved it into my office. So anyway, that's all that is. So I just wanted to kind of call that out. I know it's just a little sidebar. Anyway, personal psychology and trading. You have to develop your own understanding of yourself and your personality with how you approach trade management. Okay, so throughout this journey, you're going to have to and as you become a trader, you're going to start to understand that like there's different ways to manage trades, and not every one of those ways is going to work for your personality. And I'm going to give you some examples in a second. Now, I'm also going to tell you here, it's a unique process to the individual. So I can tell you a lot of things, but really it's going to be up to you to think about what I'm saying and then start to understand this about yourself as time goes on. And you might think that a certain type of trade management is the best way for you to go, but then realize as you start trading that your personality actually jives with something else. So that's important to note. This will probably change. The way that I traded in the early days has changed over time. And then basically, I'm going to offer a lot of ideas on how to manage trades. And as we go through the course, I'm going to go over different styles of trade management. I'm going to remind you that it's up to you to figure out what works best for you long term for your personality. So, a way to think about this is like this. If if I am there's Here's an example. Let's say I trade with 5 contracts. Now I know that I haven't gotten into all the contracts and all this other stuff. So, but just think of it like this. Let's just put it into dollars. Let's say I trade with $500. I'm taking trades that are a $500 trade. And I'm trying to get just a small move. And let's say with that $500, I'm trying to, let's say one of the ways to do it is that my target is to get $100. So to turn my 500 into 600, that's a pretty large amount, but let's just say that's what I'm doing. So I'm taking a $500 trade and trying to make $100 so that I'm now at $600. And then in my next trade, I'm taking that $500 trade and trying to make $100, and now I have $700. But I'm only taking the trade with $500 each time, and I'm trying to make $100. And I might lose, let's say I could lose $200 if I'm wrong. So I'm trading with a very high win rate, right? And that's the way I'm trading. Now, that's one way of doing it. I'm going all in, all out on each trade. Now, you might have another person who, instead of going for $100 each time, they're going for 50, but they're leaving a little bit on there. So they're taking the $50 and then they're leaving some of the trade to run to see if it goes further. And it might come back against them and stop them out, and they only make $50 if that happens, right? So they could lose $200 if they're completely wrong, or they could make $50 and then they have a stop loss that moves to break even and they let it run, and they maybe let it run to close out another, let's say $100. So they're trading with what's called a runner, a portion of the trade they're taking out, and I'm going to go over this in more depth too later on. Portion of the trade they're taking out in profit, and a portion they're leaving to run. And maybe they're going to let it run to make another whatever, 100 or 200. So they might make $150 total if the runner works out, or $200 total on that trade. But if they don't, and it only goes in their favor a little bit, they only make $50. So they might be okay with that. They might be okay with smaller wins and break even on the runners, and then occasionally getting a big runner, right? Some people like that. That's actually the way I trade, right? I trade where I take a portion of my trade out, a big portion, like 80% out as a scalp. So I get my first target. When it gets hit, I take 80% off the trade. And then I leave 20% as a runner with a break-even stop loss. And again, if that doesn't make sense right now, don't worry. I'm going to get into it more later. But the point is, I'm still taking most of the profit pretty quickly and then moving my stop. That works for my personality. Some people might want to just take all the profit quickly and then that's it. Some people might like to have a much larger target, and they're okay with the thing going in their favor and coming back to where they started and all that. And that depends on you. I mean, because you have to think, are you okay with entering a trade with, let's say, 500 and going for 200, right? Are you okay with it if it goes up to $150 in profit and then comes all the way back down to break even or against you even? Are you okay with that? And waiting for it to get to that 200 before you close the trade. Some people can watch their profit and loss go up and down throughout and be okay with it. Their personality allows for that, and they're comfortable with it, and they're confident in their system and how they trade, and they are okay with that. You're going to have to figure out what works best for you. Now, there are things that are just completely wrong to do. Like some people will just exit trades like as soon as they see a little profit. That's not following a system and having a strategy. And some people will allow stop losses to be huge with a tiny win this big and a stop loss this big. I know this funny diagram with my fingers. But that's not going to work either. So you can't have a trade where your wins are equal to like where you need 10 wins to make up for one loss because you're allowing your stop to be so big. You can't do that either. So there are some things that are just completely wrong to do. You have to be within reason, but still the way you manage trades is going to be dependent on your personal psychology. So I wanted to just kind of spend some time just talking about that. This isn't like specifically going to tell you exactly what you need to do yet, but this is just to get you to start thinking about understanding yourself and what you're comfortable with, and also to help you understand that when you start trading, you might learn some things about yourself that are going to help you realize, hey, you know what? I need to do this a slightly different way. So I'm just want to call that out here, and I'm going to wrap it up on this one. But just remember, when you start trading, you're going to have to think about this regularly and think about, is this the best way for my personality? Is this the best strategy for me? Or do I need to adjust it? And you're going to have to try this out in the simulator environment to see what you like the most and what works the best for you. So that's it for this section, and I'll see you in the next one. All right, this section is on daily practices. So listen, with daily practices, there's a lot to this, and I want to specify here that you don't this is just a rough sketch on what can work. Now, this is part of psychology and whatnot and mentality. It's really what it comes down to is there's a lot of different ways to be successful in this space. And there's a lot of stuff that you can do and a lot of work that you're going to need to do psychologically. But a lot of what it comes down to is the tactical stuff, like your daily practices. This will help you tremendously with your mental toughness, consistency, commitments, discipline, all of that will come out a lot with your daily practices because a lot of what trading is being very consistent in your approach and training yourself to be consistent, which is a hard thing to do. It sounds easy, but it's not. So, this is just an example of some daily practices. Um, I have prayer for 1 minute. Now, if you're not religious or whatnot, it doesn't have to be a prayer. For me, it's a prayer. I believe in God, and that's just for me. Prayer is really important. It only has to be a minute. This doesn't have to be like a thing where you like sit there and do the rosary or something like that or whatever. It doesn't have to be a 30-minute, transcendental meditation. Like it can be something pretty simple. And if you're not religious or whatnot, it can still be that you sit there and you just think about your intentions and you think about gratitude, because I even have here outside of just prayer, do a 1 to 3 minute gratitude meditation. Think about your family, your friends, your romantic relationship, your career, where you live. Just feel grateful for the opportunity and abundance in your life. Feel grateful that you get the opportunity to trade and learn this skill. Feel grateful that you are healthy, happy, or that you just have a family, that you have people that care about you. Whatever it is that you feel grateful for, just really feel it. Like really just sit there, close your eyes, think about those things, all the things that make you feel happy and grateful in your life. Just really feel that gratitude and feel the abundance that you have. And this can be, if you, like I said, if you're not religious and you're not going to do a prayer before that, you can just extend the gratitude meditation. You can also just think about like, whatever it is, the earth, the trees, something, just something that you can really just cherish and feel grateful for. Then what I want you to do is to, and again, this is just a rough sketch idea. So you can figure out what's going to work best for you. But these are just some things that I like to do that I think that work well for me and that have helped me and changed things a lot for me in my day-to-day life, not just in trading, but in general. Visualization, 1 to 3 minutes. And this is just the idea here is that you're doing this early in the day before you even start trading. And so you can do this more like a longer versions of these later on in the day. Like sometimes after trading, I like to have like a kind of a cool down period where I do certain things. So visualization, 1 to 3 minutes. And when I say cool down period, I'll do some of this. Like I'll do a longer visualization. I have my routine. Like I review my trades. I record my video where I make my video. That's literally me reviewing the trades of the day. Anyway, visualization. Do 1 to 3 minutes of truly imagining yourself in the future having achieved everything you want and feeling that complete happiness. So basically, this is like you're thinking about yourself as like, where do I live? What are my relationships like with my family, my children, my partner? If you don't have children and a partner, maybe your visualization includes you actually imagining and visualizing that you do have those things, if that's what you want. Visualizing what your career is like, how much wealth you have, what your spirituality looks like, virtually everything that you have achieved and where you're at when you have that complete happiness, you're going to visualize that. You're going to visualize what a successful trading day looks like at the end of the practice. So basically, you're going to spend the time visualizing yourself in the future having achieved everything that you want. Maybe it's simple for you. Maybe it's like I just, own this like simple house and I have like a whatever, like a 2020 car that runs really well, and maybe it's something like really simple. Maybe for some of you it's something really huge, like you have a vacation home and you're on your way to go to the vacation house and you just left your other house and you're doing this and you're doing that. Whatever it is, you're visualizing this level of how you feel having achieved the things that you want in your life, what your relationships are. You're really visualizing it, like really seeing it all, and then and really feeling it. That's what you have. That's the important thing here, is that you're really visualizing it and feeling it. And that starts to internalize it for you. This will affect your mindset in a really positive way. And then what you're going to do is, after doing that for a little bit, like I said, 1 to 3 minutes of this practice, you're then going to visualize a successful trading day. Basically, that can be a short part of this, where at the end of this, you now visualize yourself having a really successful trading day, hitting your goals, taking trades, executing properly, having a few really good trades, really like, just a great trading day. You're going to visualize that in advance. Then you end the practice. Now, this is the fitness part of this is not meant to happen before trading, because trading is early for a lot of us. But this is just important to get into after. So those are all those things: the prayer, gratitude, meditation, and the visualization are meant to take place before you even start your trading day, before you even turn on your computer. And so then after that stuff, after you're done trading and doing all that, another thing that's important to do is have a fitness routine. So get outside, get exercise every day, stick to a plan and a routine. The main thing is routine. You're going to hear that word a lot, and it's important to have a routine. It's going to make you more consistent with your trading if you have a routine. So have a plan, whether that's, and this is going to be different for some people. Some people are going to be really aggressive about their fitness. Some people are going to be less aggressive. Some people are going to just need to take a walk every day. Whatever it is, I just think it's important to get outside every day, get a little bit of exercise, whether this is grueling exercise and intense weightlifting type stuff, or whether this is just going for a run, whether it's just taking a walk. Be kind to your body and where you're at in your life, and then work up to things, but at least have a routine. If all you can do right now is just take a walk because your body just can't handle a lot, you got other things going on. Obviously, I'm not, I can only recommend what I can. You got to be reasonable here. So maybe it's just you start off with just taking a walk, and then maybe it changes to something else. But have a routine. Do it every day. Commit to it. Stick to a plan and commit to it, and then work your way up to other things. Now, the next thing that I wanted to say here that's important is on sleep. Make sure that you go to sleep at about the same time every day and wake up at about the same time every day. Now, for me, this is crucial. I go to sleep every day between basically 10 and 10:30. If I stay up till like 10:45, that's like super late for me. So I go to sleep between 10 and 10:30 every day, and I wake up between 5 and 5:30 every day. Sometimes I wake up slightly earlier, whatever. I have my alarm set to 5:30, but I almost never wake up to my alarm. I almost always just wake up before that. Usually, like today, I woke up at 4:45 or 4:40 or something like that. Just naturally woke up at like 4:40. And I was like, okay, well, that's it. I'm up. If I wake up at like 4 or a little earlier, I'll let myself doze back off to sleep. But if I wake up at like 4:30 or later, I'm getting up. I'm just waking up. I'm up for the day. And so I go to sleep the same time every day, wake up the same time every day. Even on the weekends, I do the same thing. Sometimes, a sleeping in day for me might be that I slept in until 6 a.m. or whatever. I don't set my alarm for the weekends. I just let myself wake up when I do, and every once in a while I'll sleep till like 6 a.m. That's about it. So I'm consistent about it, but for the most part, I go to sleep between 10 and 10:30. I wake up between 5 and 5:30. That's just my natural rhythm, and it's very consistent. I feel really healthy doing that, and it's been a game changer for me being able to do that. Now, when my children were younger, it's a lot harder because you got babies waking up in the night, that sort of thing. So it's going do this within reason the best that you can is basically what my advice is here. Diet. Now, this is hard. It's hard to talk about this because it triggers people. People get defensive. I'm going to speak from my experience and from people I know and what works, not just with traders, but with elite performers, people I know who are really advanced in elite in what they do, like competitive weightlifters that I know and all that. A lot of this comes from them too. They do this stuff. They're consistent about their sleep and their fitness and their visualization, all this, because a lot of what works for being an elite athlete is also what works for being an elite trader. So that's important to note. Now, diet, eat consistently healthy food, avoid alcohol, drugs, coffee, harsh substances. Now, I do drink some green tea, but that's not a harsh substance. It's a very mild, and I don't necessarily need it. Like if I wake up in the morning, I don't get a headache if I don't drink green tea. I just like having warm green tea in the morning, so I drink green tea, and I think that it's a really good thing for me. So anyway, green tea is a good one, and I think that like if obviously if you drink some coffee, whatever, that's fine. I'm just saying for me, I avoid these things. I did used to drink coffee and I eventually quit at some point. So I'm not mad at people if they drink a little bit of coffee or whatever, if that's what they like. I think what I'm getting at here is like just do your best to be healthy in your body. And drinking coffee all the time is not super healthy. Now, having a cup a day is probably fine, whatever. So I'm not a doctor. I'm not trying to tell you exactly how to live your life. I'm just going to tell you for me, I eat consistently healthy food. I don't drink alcohol. I don't do drugs. I don't drink coffee or have any sort of really harsh substances. I drink a little green tea, and then I eat mostly carnivore slash animal-based diet, and I live completely sober. Now, sometimes I'm on carnivore where I'm just eating meat and butter, and that's it. Like grass-fed butter and some meat, a little bit of raw milk, a little bit of dairy, raw cheese or whatever, but getting like 80% or so of my calories just from meat, red meat. Sometimes I'm doing that, but sometimes I'm doing animal based. Like right now I'm on animal based, so I'm eating mostly carnivore, but then I'm also eating a little bit of fruit. And I'll have like plantains, I'll have like a little bit of savory fruit like zucchini and cucumber, but for the most part, and I'll have the occasional sweet potato, occasional like white rice or whatever. But for the most part, I'm having mostly meat based. I'm still getting most of my calories from meat and eggs, but I'm having like a little bit of fruit and a little bit of like just animal based food. I'm not having vegetables though, and I'm not having nuts and any of that sort of stuff. Raw dairy only, not regular store bought dairy, just raw dairy that I get directly from a farmer who's local. I'm really, really particular about this. Now, I'm not saying that you have to eat my diet. I'm just saying that when I'm staying strict on this kind of stuff, it really makes a big difference in my life. I feel way better. My body feels better. I'm healthy. I'm sharp. And all that stuff helps me be a better trader. Being consistent on my diet, my sleep, my fitness, my prayer, my meditation, my gratitude, all this stuff makes me a better trader. So anyway, I'm not a professional. This is just what works for me. What works for you will probably be unique to you. Your needs might be different than mine. Your body's going to be different than mine. So again, you have to adapt this stuff. But the point is, get serious about your physical health and your mental health, and your trading is going to be better. And so that's the important thing here and the important takeaway. So come up with a routine that's going to work for you and stick to it and start practicing it. Even before you're trading, before you even start trading, just start to develop a routine now and start to stick to it, because I think it's going to make a big difference in your life. Welcome to the section on trading in the zone mindset. Basically, Trading in the Zone is a book. You can see it here. Trading in the Zone, Confidence, Discipline, Master the Market with Confidence, Discipline, and a Winning Attitude. So this is by Mark Douglas. I think this is, 2000, so it's a little older. Um, Anyway, I have a link to it here. It's not a referral link or anything, just a link that I found for the hard copy. But you can see there's a few different versions. I have the Audible one, and it's a good book. But I don't necessarily think that this is like the best book ever on trading mindset, but it's one of the top ones. My favorite one is The Mental Game of Trading, which is in the next section that we're going to talk about, and I already alluded to it when I talked about tilt. But we'll talk about this one. This is probably my second favorite for mindset. These are kind of my two go-to books that I recommend to people for understanding trading mindset, trading psychology, because they cover things a little bit differently. So here's some key things that I wrote down. Now, I think I zoomed in enough, but let me zoom in just a little bit more because I don't know how small this will look I'm using a big monitor. So first things, objectives of the book. Prove to the trader that more or better market analysis is not the solution to his problems with trading difficulties or lack of consistent results. So what it's saying here is that it's not always the case, and many times it's not the case, that you need to just do a way better job of analyzing the market and then all your problems are solved. Because a lot of the times, the problems that you're having aren't that you don't read the market properly. That is a problem that does happen. Now, let me be clear on that. It is the case that you have to learn how to read the charts, and it might take a while, and you might just read things wrong, and that will happen. Like you might read things wrong, but execute your trading strategy perfectly and still take a loss. That's reasonable because that means that you still followed the rules. You didn't tilt, you didn't do anything like that. But what really happens a lot is that you might force a trade and go outside of your system, and that's a mental problem. And so what I mean by this is that there's times where, let's say I'm watching the market and I see a possible trade to the downside and I take it. And then I end up losing the trade, but I didn't mess with anything. I entered the trade the way I'm supposed to. I followed my rules, and then I lose the trade. Well, afterwards, I might look at it and go, you know what? I actually read things wrong. That's a market analysis issue where I read the chart wrong. I took a loss, but I still executed the way I'm supposed to. So that's actually not a bad thing in that case. However, let's say I'm looking at the market and I just feel like it's going to go short, and then I just take a short. I'm not necessarily waiting for my perfect setup, not exactly following my strategy, and then I take a loss. That is where psychology led to my loss, not a market analysis issue. It was me just having a feeling and taking a trade, but not actually waiting and being patient. So that's what it's talking about here. A lot of times, the lack of consistent results and trading difficulties can actually be due to your psychology and not necessarily your strategy. So that's something to keep in mind here. All right. Next thing, to convince the trader that it's his attitude and state of mind that determine his results. Now, what this is trying to tell you here is that the way that you are, what your mental game is when you go into the market, will affect how your day pans out. You might, if you're feeling gun shy and nervous and anxious and not feeling grounded, you might skip trades. You might not feel confident. That will affect your results, even if you're reading the market properly. So you might miss trades and all that. Then it's to provide the trader with the specific beliefs and attitudes that are necessary to build a winner's mindset, which means learning how to think in probabilities. You have to understand this with trading. Most of the time, most strategies, you have an edge where there's a higher probability of success than not. Now, there are some strategies that have a lower win rate but a higher, size or whatever. But a lot of the ways that we teach are high win rate strategies, and so your strategy has a higher chance of succeeding than not, but there is a chance that you'll lose. And I do think that also most of the time you can have, depending on how you scalp, you can have close to 100% win rate if you read things properly. Now, yeah, that would mean that you're being very conservative in your entries and patient and all that. You're not taking aggressive entries, all that. You can do it. But really, if you have like 85, 90% win rate, there's just going to be some times where you lose. Like let's say you're going for 8 ticks, right? If you're going for 8 ticks of profit, There's a chance that the trade is a winner if you would have taken 4 or 6 ticks, but it doesn't go 8 ticks and it reverses. And that will happen sometimes. So you have to understand that, but you need to think in probabilities and know that you're most likely going to win if you follow your strategy, and you have to be confident in that. Address the many conflicts, contradictions, and paradoxes in thinking that cause the typical trader to think that he already does think in probabilities when he really doesn't. This is a big one. A lot of people think that they understand market psychology before they really do. And they think that they're, trained and well versed and all that, and then they blow their account. So it's important to understand that it takes time to actually really recognize and understand that you do think in probabilities and that you can be okay with those losses. To take the trader through a process that integrates this thinking strategy into his mental system at a functional level. So basically, just how you're integrating this into your day to day. This is just the table of contents from the Audible version. I shared it here just because I think it's useful in just seeing like how the book is laid out. So it starts with the road to success, the lure and dangers of trading, which I think this is a big one. A lot of people think that they're going to, you know, become millionaires overnight, and then that leads to mess ups in their psychology. Taking responsibility, consistency, dynamics of perception, market's perspective, trader's edge, working with your beliefs, the nature of beliefs, the impact of beliefs on trading. So a lot of this has to do with beliefs and what you actually believe to be true, and then thinking like a trader, which a lot of times it's not common sense. What makes traders successful is not common sense. It's a thinking differently mentality. It's really difficult overall. Here's some other notes that are kind of directly from the book, just some direct quotes and whatnot. The best traders think differently and are not always the best analysts. So that's a really important thing to note here. This isn't about who's the best market, analyst of all time. A lot of the times, even in these big quant firms, the best analysts aren't the best traders. The best analysts work with the best traders because the best traders can execute without freaking out. And the best analysts a lot of times can't do that. They don't have the psychology to do it. Trading's a zero-sum game. What does this mean? There's always a winner and a loser. That's just the way it works. If you win a trade, someone else loses a trade. You lose a trade, someone else wins a trade. You have to understand this. It's a highly competitive industry, and people are trying to bankrupt you. That's just the way this works. Identity. You, not the market, are completely responsible for your success or failure as a trader. You. It's not the market, it's you. The market's purpose is to separate you from your money, but it also provides you with an endless stream of opportunities to take money from it. The market is ambiguous and impartial. It's not trying to screw you. You can't be like, oh, the market screwed me. That's not what happened. You lost to another trader. That's as simple as how that works. And the big traders try to screw over the little guys. They stop loss hunt. They do all these little tricks, and you see them throughout the day. You need to be careful. The best traders stay in the flow. They don't try and get something from the market, but rather they take what the market is offering. This is really important. They wait for the setups to come to them. Consistent winner. This is a consistent winner mentality. I am a consistent winner because I objectively identify my edges. I objectively identify them. This isn't subjective. Oh, I think this is how it works. No, I know what my edge is. That's what makes you a consistent winner. I predefine the risk of every trade. I know exactly what I'm going to win or lose. If my stop losses are slightly dynamic, I still identify the size of the bar. I know how big my stop loss is going to be. I know how many contracts to put on. I predefine this. I don't add to my losses. I know exactly what I'm going to lose if I lose. I completely accept the risk, or I am willing to let go of the trade. If it hits my stop, it hits my stop. I act on my edges without reservation or hesitation. This is a big one. A lot of traders will actually hesitate, and that can be one of their biggest problems. They might have a strategy, but they just can't pull the trigger when it comes to them. And so then what will happen is they'll watch 4 trades that they should have taken, and they won't take them. Then they'll take one, the 5th trade, and it ends up being a loser. Now, the reality is if they would have just taken all 5 trades, they would have had a winning day. But now they have a huge losing day because they just have one trade and it's a loss. That's a big deal. You have to understand this. You have to understand your edge, and you have to act without reservation or hesitation. It takes a lot of practice. It's a skill that develops. I pay myself as the market makes money available to me. So you pay yourself. You constantly pay yourself and you make it real. I continually monitor my susceptibility for making errors. You have to understand when you're making errors. You have to monitor this. You have to track it. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Okay. 5 fundamental truths of trading. Anything can happen. This is true. The market can just do things that you didn't expect. There's probabilities, but nothing's exactly perfect in trading. Close is close enough. You don't need to know what's going to happen next to make money. So when you enter a trade, you have a probability that it's going to work out. And you might say, hey, I'm like 95% sure this is going to work out. But there's that small chance that it doesn't, and that's okay. There is a random distribution between wins and losses for any given set of variables that define an edge. Now, here's the thing. With price action trading and the way that I am showing you how to trade in this, especially if you only go for like 4 ticks of profit, you can have a 100% win rate. You can. It's really hard, but you can do it. Most people cannot get a 100% win rate, but it is possible. And the reason I bring this up is that the price action is never really wrong. I mean, unless you're trading during like a news event or something, that will just do some wild, volatile stuff that will cause you to lose. But for the most part, if you read things properly, you can win pretty much every trade. Now, if you go for 6 ticks, 8 ticks, you are going to have a random set of chances where it just doesn't go that far. And it only goes, let's say you're going for 8 ticks of profit. It goes 7 ticks of profit. If you don't know what ticks means, you will soon on some of the next sections. You might go 1 tick below and you almost got your profit and then it reverses and you lose the trade. And that there's a random chance that that will happen. You have to understand that. And so if you have a 90-something% win rate, that's amazing. And just be cool with that. An edge is nothing more than an indication of higher probability of one thing happening over another. That's all it is. Not a holy grail, just a higher probability of success. Every moment in the market is unique. This is important. You have to know this stuff. You have to understand this. The market is unique. There's just, there's repeat patterns and all that, but we're not pattern traders. We are chart readers. 7 principles of consistency. I objectively identify my edges. I predefine the risk of every trade. I completely accept the risk, or I'm willing to let go of the trade. I act on my edges without reservation or hesitation. Pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Now, I put this in here twice because it's basically repeated in the book as what a consistent winner is and what the 7 principles of consistency are. It's the same thing. I repeated it here because it's important for you to understand this and internalize it. So this is the most important takeaways of this book. I encourage you to check it out and read it. It will help you overall, but also this is the most important stuff that comes out of it. So I'm going to wrap it up here and we're going to move into the next section. Welcome to the next section on trading, or sorry, not trading in the zone, of course. The mental game of trading. I apologize. I was just doing the trading in the zone one right before this. So the mental game of trading. So here is the mental game of trading. Now, these are just some pictures that I took because I have the book right next to me. And so this is the link. So you can read about the book here, understand it, read more about Jared Tendler. I haven't read his other books, but I really like this book a lot. And basically, all that I have in this is just some screenshots of the table of contents. So basically, let me zoom in a little bit. It looks probably a little small on your side. All right. So the mental game of trading, it looks a little blurry now. System for solving problems with greed, fear, anger, confidence, and discipline. Now, it's a little different than trading in the zone. It approaches things in a much more tactical way, in my opinion, than trading in the zone. And so the way it's broken down is like this. Chapter 1, a system to fix mental game problems. Emotions aren't evil. They're signals to use and learn from. Why you need a system. So it starts off with giving you a system for how to understand your emotions and to work with them. The idea is not, I need to kill all my emotions. You can't do that. So really what you need to do is work with what emotions you have and experience. Then it goes into mapping your pattern, your emotional pattern, how to understand emotions as signals, how to create a map. So it comes down to you're going to create a map of how you react to things because everyone's emotions are different. So the cool thing with this is this book helps you really map out your own psychology. And I've talked about this in this course before. Your your how you're going to approach the market, what's going to happen with your style of trading is going to be unique to you. It's going to be different for everybody, and it's definitely a unique thing, so you need to be aware of that. So, you're going to have a different map than somebody else. Find the root of your problem. Common learning pitfalls, the inchworm concept, uncovering what's causing your back end problem. So a lot of this has to do with like an inchworm. He kind of gives this diagram of how an inchworm sort of moves like this. And that helps you kind of visualize how you make progress overall. Because that's how it works. Like you're not going to just go like this the whole time. You're going to move forward and kind of have to retract. And there's a lot of back and forth as you work your way towards where you need to go. So there's a lot of information that you'll learn on that and understanding the roots of your issues and what you can do about those. Greed. Understand how greed works, the nature of greed, common signs of greed, mapping your individual greed, because it might manifest different for you than it does for me, the real cause of greed. So a lot of this is going to be about how greed affects you and how it manifests for you versus for somebody else. Then it's going to go into fear, nature of fear, common signs of fear, mapping your fear, which again, it's going to be a little bit more unique to you. Fear of missing out, fear of losing, fear of mistakes, fear of failure, all these different ways that fear will manifest in trading. So then going to go into tilt, the nature of tilt, common signs of tilt, mapping your tilt, which for you is different than someone else. Hating to lose, mistake tilt, injustice tilt, revenge trading, entitlement tilt. There's all different ways that you can tilt. So we'll go through those and how you can identify that for you. It's going to then go into confidence, the nature of confidence, common signs of confidence and signs of lack of confidence, stable confidence, mapping your confidence, which again, the way your confidence is going to look different than my confidence and how you approach the market. Correcting cognitive illusions and biases, perfectionism, desperation, hope and wishing, which hope and wishing can be just destroy you in trading. You need to be careful with this kind of stuff. Then it's going to get into discipline, the nature of discipline. This is where mental toughness is going to come in as well. Common signs of discipline problems, general strategies to improve discipline, mapping where discipline is needed, your impatience, boredom. I know some traders, I used to be guilty of this, that will have mostly had problems because of boredom trading, just being bored and forcing a trade because they're bored. Being overly results oriented, distractibility, laziness, and procrastination. When you the thing is, what discipline is a really important chapter as well, because one thing that's going to happen in trading is that you know how much money you can make in trading. The problem is if you're sitting there for an hour, you could start to go, oh man, everyone else is making money right now and I'm just sitting here. And that is where you can run into some real problems. All right, next, correct your problem. Malfunctioning mind, real-time strategy, building a productive routine. We talked about routines already, but it gets reinforced here. Troubleshooting, lack of progress, difficulty recognizing your pattern. Things get worse before they get better. Burnout, bloated brain, when life bleeds into trading. Another thing that you'll find out and read about, when your life can affect your trading, of course. You know, like this. Hey, I'll just be totally transparent here. Like I'm divorced. I went through a divorce in during my trading career, and it messed with me quite a bit. It set me back quite a bit because I was constantly dealing with a really difficult person. I was trying to make things as smooth as possible. I have children and and I have 50-50 parenting time, so 50-50 custody. It's exactly equal, but I was still dealing with this person who was trying to make things extremely challenging for me. I'm not going to speak really negatively of the other person, but I will say there was a lot of conflict that I was trying to resolve with this person, and it was a super big challenge, and it was messing with me psychologically. It definitely did. There's a lot of transition. I had to move into a different house. I had to do all these things. That stuff definitely bled into my trading. And you'll find that, when you're going through hard times in life and there's tough challenges, trading can suffer. And those are times where you might want to just simulate or just sim trade or take some time off. So that's important. Final thoughts, of course, and there's some acknowledgments and that sort of thing. And that's basically the whole book. There's not. That's just the. Obviously, I didn't read the book. I just wanted to show you how valuable this is. I mean, you can see it's all about creating a map and basically a framework that you'll be able to work within that I think is super useful. And I really love this book. Can't recommend it enough. Again, I have it sitting right next to me. Whoops, I didn't mean to bonk the mic. Right here. And I reference it pretty regularly. Like when I need to, I'll check it out. If I'm having a bad trading day or streak, I'll go back and remember certain things in there. I mean, I've done a lot of work with this book. So I highly encourage you to get a copy. It's on Audible. It's also, you can just, you can buy it, the physical copy. I like having both. Physical copy is helpful because it's easier for me to reference, but Audible is good for like, you can read it the first time, maybe through Audible, and then you can get the physical copy later on or something. So that's kind of how I did it. I got the Audible version first, and then I realized, okay, I need the physical copy of this book. Anyway, I'm going to wrap it up here, and I'll see you in the next section. All right, welcome to the next section. Today we're talking about what is a price chart. Well, this is a price chart. So a price chart is any chart that displays price and time. So basically here you have price on the y-axis and time on the x-axis. So price over time is basically what it is. You're just looking at the price over time. So if I change this to a line, excuse me, I'm a little under the weather, so I apologize. Turn off the indicators. Let's turn off all the. So this is just trading view. You can get this for free. Anyway, this is the ES, looking at the ES futures market. And so there's a line chart now. And basically what this is, it's a 1 minute chart. So every 1 minute, it plots the price, the closing price of the asset. So that's the price over time, every 1 minute as it closes. Now, there's other types of things like bars. You can look at bar charts. Bar charts are similar to candlesticks. And what bar charts will do is they'll show you basically the open, high, low, and close of a candle, but they're kind of hard to read, in my opinion. As you can see, they're just kind of, when you look at these, they're just kind of strange looking. So what I use is candlesticks. Oh, that's Heikin-Ashi candles. Heikin-Ashi candles average the price. We're not going to get into that. We're just going to talk about candlesticks here. And we'll go over these a little bit more on the next video, but that's what I use. I use the candlestick chart. So each one of these bars represents a minute, and I'm going to go over these more in the next video. But basically, that is what a price chart is. Now, if you go into Baby Pips, which I linked earlier, and I'll link this in the course description, this will explain some of these in more depth. So I'm actually going to copy this link here, and I'm going to make sure that I paste this one into the course, into this particular module description. So you can read about these in more depth. Candlestick chart is the one that we're going to be focusing on the most. That's what we're going to be trading with. So we'll be going over that in the next video. And you can see pretty much I'll show you my actual chart. This is the chart that I actually trade. So this is NinjaTrader, and you can see that it's Japanese candlesticks. You can see down here time. You can see the price. The thing about my chart, though, is that instead of a 1 minute chart, they're based on ticks, which we'll get into. Each one of these bars represents 2,000 transactions happening. So it doesn't mean, when I say that, this big green bar right here. Basically, for this bar to print, there was 2,000 trades that happened. Now, some of those trades might have been 30 contracts. Some of those trades might have been one contract. But there's 2,000 that had to happen for this to print. And as you can see, this bar right here finished at 12:58 and 20 seconds. And then this one, 12:58 and 48 seconds. So it took about 28 seconds. And then the next one, about 30 seconds in between those bars. So you can see that they're not 1 minute bars. They're actually contingent upon number of transactions. But this is still a different type of price chart. This is just called a tick chart. So we'll get into some of these on the next section where we talk about Japanese candlesticks. So we'll see you there. Now, again, I don't want you to think that you got to go out and scour the whole internet. So I want to talk to you about Japanese candlesticks. And basically, I don't want you to have to, you don't need to become an expert on every type of candle and all that at first. You just have to understand what a candlestick chart is and how it works. So basically, the same Baby Pips website has this information, and it shows open, high, low, and close data, just like a bar chart, except it has colored bodies. So what's happening here? Let me get a actually better chart. I'm not really much here. I'm just gonna X out of this, open up an actual chart. And you know what? Let's use trading view. I'll just zoom way in. And so what you can see here, sorry, I just like NinjaTrader more. Anyway, here's what we're going to do. We're going to zoom way in. Okay, and we're just going to look at this area right here, okay, on the chart. And I'm going to change my pointer to a cross. Now, what I want you to see here, and I'll change back and forth between these as we go. You can see that there's a tail on the bottom and the top, and a body, right? Like a candle, like a candlestick. So this looks like a candle with a wick and then a tail. So you can, the wick, there's a wick and a tail. And, you know, it doesn't really matter. Or you can just call them stems. Doesn't really matter. But the point is, on a red candle, all that it means is that when the candle opened, so if you're looking in time, so here you go, over here. This is really printing in real time right now. It's after hours, so it's really slow. But the market's not really open. This is the overnight session. What it means is that when this candle started, so remember, I'm using a 2,000 tick chart. So after 2,000 transactions, this candle right here ended, and the new one had to start. Now, if it's the open price is where it opens. The close price is where the body will close whenever this bar closes. And the stem is just where it goes in between. So this bar opened at this low price down here. So if I pull up my crosshair, that's at 5816.5. Okay? Hopefully you can see that properly. I'm going to zoom in even more just to show this. Okay? So you can see, and as you can see, there's no stem on the top now because the bar is pushing up. And if it closes right here, there won't be a stem on top because this is just the price it closed at. So the big part of this is the body of the candle. That's called the body. There's a tail or a stem down here. So when this candle opened, it opened here. It started moving around. The price eventually came down lower to 5816.25, but then it came back up. So that's why you have this stem, right? Now, if this candle reverses and goes lower, then it'll start to have a body that's red. And the reason is because a red candle opens higher than it closes, right? So a red candle opens up here and then it closed down here. Or this red candle, it opened here and it closed here at 2,000 transactions. Now, in between, it did rally all the way up and come all the way back, and it went down and it came up. But this is how it settled. So that's how candlesticks work. You can watch videos on these online. You can learn more about it on YouTube. You can learn it from the articles. But the point that you need to remember is that green candles, they open lower and close higher. Red candles open higher and close lower in price. And the stem on either side can happen in different ways. So you can see it here, for example. Before, when we were looking at this, there was a stem on the bottom, and then this thing got green all the way up to the top. But now, because price is coming down, the body is moving with it because the body is just the area between the open and the close. If the price closes here, Then you have a stem on both sides, but the price ended up settling somewhere else. And that tells you something. If you can learn, it tells you something about the bar. When you see a bar like this, for example, this red bar, this is would be called a reversal type bar. So basically, price is moving up. You get a sideways bar right here. This red one is kind of a sideways bar because price opened here. It went up, it went down, eventually closed almost near at the same place as it's open. It has barely any body. Then this one goes up, and then you get this reversal candle. So what happened here was it opened here. It eventually tried to push up and reversed, and then it closed lower. So that tells you that a bunch of sellers stepped in and pushed the price lower, and you can see that over and over again. If you scroll out on any chart and you look for those types of bars, you'll see like bars like this one, where there's not much body. It opened at the same place as it closed, but it did move way up and then reverse at a certain point. And those typically do lead to reversals. Not always. You don't just take trades on those, but you'll see that over and over again. So this is what Japanese candlestick charts look like. We're not concerned with line charts and bar charts. We're concerned with candlestick charts because they give us a lot of good information about where the price is going in a given time frame. And if we switch to our time-based trading view chart, the coloring is kind of weird on TradingView because it's just solid red or solid green. I don't love it. You can customize these settings, so it's not that big of a deal. But all right, so you can see here's a reversal candle. And I'll pull up my cross. So you can see this green candle. It opened right here. It tried to push lower at some point. It came back up, eventually pushed higher. So this is a bullish candle. Bullish just means that it's buyers in control, the price is moving up. Bearish is sellers in control, price is going to move down. So a bullish candle is this one. It means it's going up. It's aggressive buying. Bearish candle, like this red one right here, that's a bearish candle, aggressive selling. Bearish goes down, bullish goes up. That's some of the terminology you will need to remember is bullish and bearish. And you'll see that all over the place. I'm sure that most of you already are aware of what that means. So there's not much else that I need to cover here specifically on this. I just wanted to give you some intro into what candlesticks are and how we're going to be using them for our trading. This is the style of chart that we're going to use. And you'll remember it from when we did the setting up the chart section. So I'm going to end it here, and we're going to move on to the next section. All right. So what is price action? What actually is it? So here's an article. Obviously, the simple definition, the movement of a security's price plotted over time. Basically, it's just talking about the price chart, what we've already been looking at. That's price action, just the movement of price on the chart in your time frame. Now, the thing is, though, price action, the way we're talking about it, is specific types of movements that happen and things that happen within the candlesticks that tell us something about the market that we're going to use in our trading. So right here, you can see, you'll hear people talk about candlestick patterns. Okay. You'll hear me talk about patterns sometimes. Now, we're not pattern traders. We're not learning how to pattern trade. You'll hear Mac from Price Action Trading System say this. We're not pattern traders. We're chart readers. We learn how to read the chart. We learn how to read the price action on the chart and then make trades based on that. Now, there are patterns within that we use, but we use them within the context of what's happening. So, for example, engulfing patterns. Sometimes we use engulfing bar traps. Now, we only use them in very specific things. So you can read through this. You can see like what it talks about. And here's another thing that's important. It's not an indicator. It's the data source from which all the tools are built. Indicators look at the price on a chart and then apply mathematics to the price, because all we have is the price. That's all we have is where did the price open? Where did it close? Where did it go within a time frame? But indicators will take the price and then apply different mathematics to it to give you some other representation. But at the end of the day, all that it's doing is just giving you another representation of the price. So I'm going to X out of this. You can read through this. There's a lot of information in this article. But this here is price action. Just the price on a chart over time. That's what we're talking about. Now you can see here it's election night. I've been recording this on November 5th. And so you'll see that there's some pretty wild action here because it's the election and started to get kind of crazy in the overnight. It was slow and now it's starting to rally. So we'll see what happens with that. Now, I have one indicator here, and that is the 21 EMA, which is the 21 period exponential moving average. So what that does is it takes the last 21 bars, right? So this, where the line is right here, it's taking the last 21 candlesticks. It's taking the last 21 candlesticks and making a moving average of the price on the last 21 over time, with the most recent prices being weighted heavier, and that's why it's an exponential. The weighting is towards the most recent price. So you'll see it follows the price. That's the indicator I use because it helps me read price action. For example, when the price is over the indicator and moving up, it's an uptrend. When it's below the indicator and moving down, it's a slight downtrend. When it's going above and below, it's a range. And it's just that simple. That's what I use it for. And that helps me identify the market structure, what's happening in the price action. It helps me when I'm plotting things. For example, maybe if I was plotting out, I might draw some trend lines. And I was, maybe I was thinking there could be a channel here, and it was in play for a little while. It ended up being an actual steeper channel towards the end of the day, and you really end up with a sort of an uptrend that looks probably more like this for a while. And this is price action. I'm looking at the price within the context of what's happening. I don't need an indicator to understand that it's an uptrend and that there's possibly some trades in there. So that's what we mean by price action. Now, a couple of things to note here. Price action trading, right? Price action trading is basically just trading in a way where our chart is really only showing us the price and the time, and we're drawing everything ourselves. So we're drawing our trend lines, we're drawing everything. We're not using indicators to do it, with the exception of this indicator. So it's just a clean chart. It's just a clean, empty chart. I also have these lines that are plotted that show me the open and close price. So this is where the price closed in the regular session, that dotted line, from at 2 p.m. today. So that's what it is. It works in all markets. It works on all time frames, with the exception of like super tiny. If I change this to like a 100 tick chart, it's a lot harder to read price action like that because it's just such a small movements, and there's so many bars. But for the most part, you can use it on every time frame and every asset. If you go and just plot random charts, it doesn't matter what they are. Like, pick an asset and change this, and the concepts that we teach will apply. So if I go to the 10,000 tick chart, a lot of the same concepts will apply. When I start teaching you about some of the different entry techniques that we use, you can go look at them and see that they play out on a 10,000 tick chart, they play out on a daily chart, they play out on a 2,000 tick chart. So you'll be able to see that. That's what we mean by price action. Now, I will say that because we're price action traders and we're learning how to read charts, there's a lot of interpretation that happens here, and you'll have to develop that over time. So that is the one difference here. A lot of trading systems that are taught are more of like, they're more of like a mechanical, follow these specific rules. It needs to be X, Y, and Z, and it's almost like an algorithm. Price action trading is a little different than that, because in price action trading, we are learning how to understand the context of the chart and what it's telling us. So you're learning how to read it. It's like learning it's like learning how to interpret another, like a language and things like that. Now, I will say, price action traders, like, we are going to be focused on learning how to identify ranges, learning how to identify trends, learning how to identify nuance in the market, understanding breakouts and failed breakouts and different things like that. We're going to understand, you know, if we should enter or exit the market. We're not just going to go and go, you know what? We're over the EMA. We have X, Y, Z. Now we take a trade. There's other context that we're going to decide. How far away are we? Are we near the top of a range? Did we have a break of a trend line and a new high or a new low? So there's going to be a lot of things like that that come into play. There are rules that we follow. Don't get me wrong. There are rules that we follow, but the rules are related to price action because price action, the price follows rules. It's rooted in human psychology and it follows rules. Like you'll find that the market likes to move in pairs of two. That's why we'll talk about two-legged moves. You can see them everywhere. You can see right here, for example. One leg up, second leg up. And you can measure it. And it's basically exactly a two-legged move. And then it goes sideways for a second. And then a new move starts, you know? And sometimes you can even measure larger legs and see that those play out. And that's where this one started to find some sideways action, and then it goes up. You know, there's a lot of nuance here. You can even go back and measure. This is just an example, and this is why it works on all time frames. You can measure larger moves and see that one played out pretty much exactly. Earlier today, I drew out a measured move. This is going to look crazy for a second, but I'm going to show you this. This is part of learning price action. You're going to understand that this is a huge leg right here, right? Big move up overall. And then you draw the second measured leg. And where are we going? Exactly to the measurement. Exactly there. This is just unbelievable. You got to love it. I mean, actually, it's totally believable because I watch it happen all the time. But I'm gonna take a screenshot of this because I want to share this with. I was talking to the community today, and I was showing them the measured move, and there it is, played out in real time. Now, if we go over here on the 10,000 tick chart, it's the same thing. Like that's exactly what we were just looking at. We were looking at this day, so we were looking at this measurement right here. That's the move. Now, there's obviously moves that happen within the context of things. And you can also say that on here, we had a steeper channel up, right? Something like this, that then became a flatter channel. Something like this. That's how the day played out. It's called a spike and a channel. This is all price action. I know how to identify this stuff, and this is what you're going to learn. And that helps you stay within the context of where to take trades. And then you know that you want to be looking for longs off the bottoms of the channel, right? You want to be looking for longs, take buys off the bottom of the channel. Those are good spots to take trades. Now, obviously, you don't just take them blindly. There's a lot more to it than that. But this is just part of what you're going to understand here. There's just a lot. There's a lot to learn when we start going through the price action. A lot to learn here, and you can see, man, this thing is just going to go. I think. Let me actually did not have all those on, so let's delete. We don't need. Remove a bunch of that stuff because we don't need any of that. And anyway, I just think that's so cool. So cool that it turned out like that. So that's what we mean by price action. Now, this course is going to go through this in so much more depth. So you will learn the concepts of what is in price action, the price action rules, the way the market moves. But it's important to understand that psychology plays into all this. And so the market moves in twos. The way that the price moves becomes predictable when you learn how to read the chart. Now, of course, that doesn't mean I can open this thing and go, oh yeah, this is exactly where we're going, and it happens every time. But I can have a target. That's how I had this target up here. This was a gap fill that I thought we were going to fill, and it was a measured move. And it exactly filled it. And now it's finding resistance there. And earlier today, I was talking about 58, 45, 50. And there it was. That was the open of this candle. 50, yeah. Yeah, right. 58, 45, 50. Yeah, it's exactly what I was talking about. That was the price. I said it earlier in Discord, so you'll see that. And anyway, so you don't know for sure that you're going to get there, but you have targets, and you let the price action guide you, and it will show you where it's going, and you can go with it with your trades. So that's what we are doing here. We're learning how to read the chart in that way. So I'm going to wrap it up here, and I'll see you in the next section. All right, welcome to the section on trading principles and overview. So the idea here is to get you acquainted with what kind of things you can do in trading. And so what I am going to have open here is a trading view chart. Now again, trading view is a software that you can use for trading. You can download this for free, create an account for free, use it online. You can get it on your phone. I use TradingView a lot for charting my longer term positions on things like Bitcoin and stuff like that. But this is looking at the ES, which is what I trade. And this is just a 1 minute chart here. And basically we're going to go over this whole section, market structure, context and time frame analysis, longing and shorting, types of orders, types of trading, and then stop losses and take profits. So the idea here is to get you understanding the terminology that we're going to use, understanding a little bit about trading execution, the fundamentals of trading. Some of this will be repetitive for some people who've already been trading for a little while, but some of it might be a little bit new. So I encourage you to kind of listen. My take on things might be a little bit different than some of the things that you've heard before. So without this video getting too long, I just wanted to give you a quick overview. We're going to be using mostly TradingView for this section. And then what's going to happen is after this section, we are then going to be switching into mostly using NinjaTrader for the rest of the duration of the course on everything. But I will show a little bit of stuff on TradingView. It's good for you to understand that there's more than one platform and to understand how that works. And what I'm also going to show here, just looking over some stuff. So stop losses, take profits, some of that stuff. The reason I'm going to show you some of the stuff in NinjaTrader, but I'm also going to show you on TradingView because I like the way that TradingView visualizes things. So I'm going to get right into the next section on market structure, and then we're going to go from there. So I'll see you in the next section. Welcome to the section on market structure. So when we're talking about market structure, what we're talking about is when you look at a price chart, what is happening? Is it a trend? Is it a range? Consolidation? What's happening overall? What's the structure? That's what I mean when I say market structure. So just for example, you can look at this chart right here and see that over time, from this area down here to this area up here, it's basically going up. It's a trend. It's an uptrend. And you can tell because the price is making higher highs and higher lows the whole time as it goes up. This is a trend. You can see there's a trend line that fits along the bottom. And there's also a trend line that fits along the top. It's a trend channel line. It's an uptrend channel. Okay. So if I were to take a tool like this parallel channel tool and draw it off of the low here, I could probably find some sort of way to plot this. You know, it might not be perfect, but just as an example to illustrate, you can see here there's a trend channel. Price is making higher lows, and what I mean is that these on the swings, as the price swings, the lows are getting higher, right? Each one is getting higher. And just to visualize, here's a low, here's a low, here's a low, here's a low, here's a low. And as you can see on these actual swings that are happening, the price is making a higher low each time. So the price is stepping up as it goes, right? It's also making higher highs on the other side of the channel. Every time that we're making a swing up, it's getting higher. Okay? So the structure, this is the market structure. This is a trend. It's an uptrend. And you'll see here, this is the way that you look at it. Now, when you have a trend break, that doesn't always mean that the structure has changed fundamentally, but the structure of this channel has changed. So the market structure is still bullish, right? Still going up, but now we have a new starting point. So then maybe down here, the thing is, it doesn't always mean that the trend is going to definitely be over. Sometimes it's not fitting perfectly here, but there's some sort of a channel, not as strong, of course, but it still is upward bias. But it's getting a little bit funky. Like this is not really, this high is lower than that high. So it's getting a little bit wonky. You know, this low is almost as low as that one. So you can see that the trend was getting weaker after the break. Okay. It was still grinding higher, but it's a little bit of a different structure. It still is a trending structure, but it's a little different. So price can do that. This is, again, just a 1 minute chart on the ES. That's just an example, right? And if you scroll in, let's scroll in and we'll go over here, actually. Let's go to, okay, this is a good example. The structure here, you could argue there is some downward bias, right? There's maybe some sort of a downward trend in here, something like right here. Maybe there's a trend there that went down and then it broke. You know, you can kind of see this high is lower than that high. There's some bias to the downside. But what you really have here is more of like a range, right? So if you were to take a horizontal line, put it there, take one, put it down here, you can kind of see price is ultimately in between these lines, right? If I mark this off, basically from over here to over here, you can kind of see in between there, the bulk of this is in between the line. So that tells us that the market structure is that we are in a range or a consolidation, right? We're consolidating, we're congested, we're in congestion, right? These really tight areas. So if I take, let's do, we can even just use a parallel channel, it's fine. Right? You can even look at areas like this. This is a congestion zone. Maybe you can argue that it's lower, something like that. Whatever it is, you know, could also be that there's a failed break, you know, whatever. But the point is, this is a congestion zone. It's, you don't really want to be trading in there very much. There's not a lot of space in between the highs and the lows. It's inconsistent. So that the market structure here is sideways, congested. We're not making higher highs and higher lows, really. We're not making lower highs and lower lows like we would see in a downtrend. This is called congestion. You have bars stacking up side by side. They're overlapping each other. There's no real directional bias in any way. So that is called congestion. Now, a range, which is this larger one that we drew, is basically like a bigger version of congestion. So when we draw a range, like here, okay, let's just delete those white lines. We don't need those. And we'll even delete the yellow ones. We don't really need those. And we can just look at it like this. A range is basically an area of congestion that's larger. It's an area of consolidation. Price is consolidating, and before it decides if it wants to go higher or lower. And that is the market structure in this moment here. Now, if you scroll out far enough, right? If you scroll out far enough, there's other things going on. Technically, we kind of have somewhat of an uptrend here. And that's just a moment in time within there, okay? And this is the thing. There's always different contexts that you can evaluate. So if I zoom in, you can see that price was between this big range, big uptrend that's like a big range. And there's points of it where it's consolidating. Here's a consolidation zone. I'll circle it. That's a consolidation zone. That's a consolidation zone. You can kind of see, if you just scroll out, you'll eventually start to identify this stuff with just your eyeballs. There's one. It takes time and practice, but you'll start to identify, sometimes even within trends, there's these areas of congestion and consolidation. You can even see them really small ones like that. Even here a little bit. And so, and then what I'll do is I'll zoom in so you can see what those look like. And also, even within this overall uptrend, there are some downtrends within here. The market structure can flop on you. There's a downtrend. Price is making lower highs and lower lows. That's a downtrend. It's the opposite of the uptrend. And you can get these within this context. You can even see here, technically, that within this uptrend, we had sort of this, I would say it kind of looked like this, maybe. You had this sort of downtrend channel within. It broke out, and then it immediately went down to make this leg down to the bottom of the channel, and then it bounced from there and got bullish again. So there's a moment of correction in this. Now, overall, when you zoom out, it doesn't really look like much. I mean, when you zoom out, it just looks like this. Just to move back down to the bottom. Now, here's the interesting thing. You can see that we turn into a range for a while after. And then we start to get a little bit bullish. But you see how this is these lows. This isn't like that uptrend that we looked at over here. Price isn't just going like this, where it's making a series of higher highs, higher lows. In the bigger channels like this, even if there's an upward bias, it's kind of a range in that, sure, here's higher highs, higher lows for a little while. Then this low right here, is lower than this low, right? So that is an interesting thing to note. This is a lower low than these. And that is part of the fact that we had a short-term downtrend. But then it reversed, and it maintained the structure because this high right here, this low right here is still higher than this low. And this is still higher than this low. And that's why overall, these four circles, each one of those is still higher than the last. So that is how I say we still had an overall upward biased channel. So if you were looking at a bigger time frame, that would be a significant thing to note. And we'll get into that in the next segment. But the point is, when we're looking at market structure, we always want to identify what is our structure when we're trading. Now, I know that I circled this and it looks insane right now. So what I'm going to do is remove all of our drawings, okay? And make it clean again. Now, the point is, let's say we're trading and it's a trading day, right? We need to know what our context is. And we need to know what the market structure is. We're always identifying that. Is the structure intact or not? Is the structure broken, right? So if we were trading in real time, and this was our trend channel, throughout the day, we're going to look to take a trade every time it's coming near the bottom and giving us a good setup, right? So we might take a trade here. We might take a trade here. Let's see. And I'm going to teach you how we enter these, but at this moment, I'm just trying to show examples. We might take a trade there, the higher low. Excuse me. And we are going to be watching for the structure. Now, I'm looking at a time frame that I don't really trade very often, which is the 1 minute. I trade a tick chart. This is just an example. But once this happens and it breaks, now we're going to start to go, okay, What does that tell us? There might be some new things that we have to understand about the market structure. The uptrend is broken. So now we have to evaluate, what does that mean? Now, I'll get into trend line rules and all that later on. But for now, we just need to understand, what is the market structure? Is it an uptrend? Is it a range? Or is it a downtrend, right? Here's a downtrend. Here's the lowest. This is probably the way that this downtrend fits best. Something like this. Basically, after this high, we made a lower high, and then it reversed. It changed structure, okay? So after the series of higher highs and higher lows, eventually we made a lower high, and then boom, we have a change in our structure, and that's a downtrend. Lower lows, lower highs. Eventually that breaks, and now the structure changes again. The structure here is a range. You can just see that just by looking at it. It's very sideways. Something like this. Maybe the low might be, might be these. It's always hard to say for sure, but it looks something like that. It's a range where it's sideways, not really a structure in there. Now within the range, there's micro trends, right? There's micro structures. That's a micro downtrend, right? This is a micro uptrend with a break and then a new high. It also could be argued that there's a bigger uptrend within this range that gets a break there, and then it gets a new high. So there's different ways to look at this, but you need to understand your structure for when you're taking these trading positions. And you have to train yourself to just look at this and see that over time. Now, it takes screen time. There's no magic bullet here. But what you just need to understand is that the price and the market always has some sort of a structure. And now if you go out to any time frame, you'll see this. Now the structure lately has been upward, so it's been a lot of uptrend. But if I scroll back far enough, here's a day where it was really trending down for a while. Here's a downtrend day. You can just see that just by looking at it. Price is going down overall. Now there's a big break and then a reverse. But even just zooming way out, you can pretty quickly start to identify these bigger structures overall. And understanding, hey, we're in a downtrend. And even though like this area right here is a consolidation sideways kind of range zone, you're still thinking, well, we're still in a downtrend though. So I'm still thinking that price could keep dropping further, and that's what it does. So you have to understand that context. So that's really just what I want to talk about with market structure. I don't want to go much more than that into it for this section, but just understand that there's only really a few types of things that are happening in the market. It's basically we're going up in a trend, we're going down in a trend, or we're going sideways where we're up and down in a range. Those are basically the three things that can be happening at any given time. And the thing is, while those things are happening, there's larger context at play. If you zoom out to an hourly chart, you'll start to see, and we're going to go over that in the next section. So I'll stop it here, and we'll get into it. There's two things that you can do when you're trading in the markets. You can go long, and you can go short. Going long means you're buying a position in order to sell it. So you're trying to buy maybe down here and sell up here, right? From there to there. That's a long. Short would be you're selling in order to buy back at a different point, maybe here. And the way that when you're trading in futures markets, so this is confusing for some people when they're first getting started, by the way. Everyone just thinks that you can buy, right? You can just buy, I can go buy gold, I can go buy Bitcoin, sure. But if you're trading with certain types of brokerages and futures brokers, you can borrow from the broker, basically. You can sell, even though you don't own the position. So it doesn't matter what it is. This is futures. But like, let's say you're up here and you're not in a position right now. You don't have a trade on. But you were thinking this is going to go down. Then you're shorting. You're going short. You're selling. Even though you don't have a position, you're selling. The broker allows you to sell and then buy back down here. So it's the same type of trade that you're making. So you can go long, which means you are buying, or you can go short, which means you're selling. Okay. So when we enter a short position, it means that we sell and then we ride it down. And then to exit the position, it buys. That's how we exit the position. When we enter a long position, we're buying, riding it up, and then selling. Okay. And you can see here, long position. So let's say we entered a long position right there. Okay, there's a long position on the chart. The red is our stop loss. If it came down and hit that level, we would be out of the trade at a loss. The green is our take profit. When it hits that level, we take profit, right? That's an example of a long position right there. Okay, that's a long position. Here's a short position. Let's say we entered here. Okay, just an example of a short position right there. Stop loss up here. So if the price came up, we'd have to exit the position. If it goes down to there, we exit the position and profit. So that's how that works. You can go long, you can go short. Those are the two ways that you can go in trading. And that's what we're going to be doing. We're going to be entering long positions and short positions, being in and out of those trades relatively quickly. So just understand that you can go long and you can go short. This is the style. This is the way that we trade. We're not, some people that trade like crypto and stuff, they only go long. They're only buying ever and then selling higher. But for us, we trade both directions. So we don't care if the market's going down. Honestly, you'll hear me say this sometimes, ain't no money like short money. When the market's going down, it tends to go down harder than it goes up a lot of the time. A lot of the moves can be really harsh when it goes down. So I love shorting. When I'm going short, a lot of times that's when I make the most money in my day. So I just want to call that out and let you know that's what longing and shorting means when you hear people talk about it. And it doesn't need to be complicated. It's really simple. And I'll talk to you in the next video. All right, everybody. Welcome to the section on levels. So levels, what are levels? Levels are price levels. That's what we're talking about when we say levels. We're talking about price levels and price zones. So if you've been on YouTube at all, you'll see some people draw stuff like this. They'll go and they'll take an area and they'll draw these like big kind of things that look kind of like this. Some people call it order blocks or whatever. It's basically a zone of possible resistance. Basically where the price pivoted. Price came up and it rejected in this area. So it kind of becomes a zone. And when price comes back, it might bounce off this area. And you can see these things come into play sometimes when it comes to zones. Like here's a big I didn't even change the size of this box, but you can see this box right here, this candlestick. It actually fits perfect. And you can see the whole zone was a resistance after it broke below it. So it bounced off it here, it got back inside it here, rejected, got back inside it, rejected again. And so that is a level. But from the other thing with levels is sometimes you can just use a line as a level, right? So here's an example. The close price of this green candle, which is the open price of the candle next to it, became a resistance. It bounced off it there and rejected. And now that is the all-time high currently. The all-time high is technically right there. And so the all-time high on the ES happened today, and that is now the all-time high. That is going to be an important level in the future. When we come back up to that level, you can expect something to happen. Possibly a rejection. It's going to be a level that's important. So when I talk about levels, I'm talking about a price level or area. And a trend line. You have a trend line, right? Something like this. Let's see. So this is not a perfect trend line, but the bottom of this is a level until it breaks and then it comes back in. So you can see that this was a level. This whole line was a level. Another important level. Wherever we closed for the day. So right here, this dotted brown line, that's a level. It was yesterday's close. So this morning, before the market opened, it opened right into the price. So when we were down here in the morning, you kind of assumed it was going to come back up to that level. So you kind of knew that that was a level. And then this is the opening price, the yellow line, and that becomes a level, which we actually never came back to. Now what's going to happen here is we're going to close up. We closed up here for the day. And so now when the market opens again, there's probably going to be a gap on the chart. And there already is some gaps on the chart. And gaps are also levels. So when the market does this, where it closes here, right? What time was that? Yeah, so it closed there on whatever day that was, the 6th. And it never came back to this dotted brown line. So there's a gap. What's called a gap. That's a level. The reason it's a gap is during the regular trading hours. The regular hours open right here at 6:30, somewhere in here. Yeah, 6:30. Basically this candle. So on a chart that doesn't show the overnight hours and just shows the regular hours, there's a gap in between the price. That's a level. And price comes back and fills those gaps over and over again. It's an important level. So when I talk about levels, that's what we're talking about. Now there's a couple other things to note here with levels, and gaps are important. When there's a gap somewhere, it almost always comes back to fill, or at least tries to. Here's one from today. And you can see it tried to come back on that candle right there. This candle gapped up. Now, there's not that big of a gap because there is a wick right here on that candle. But when prices gap over, they always try to come back, and it did there. And if they can't, it'll reject the other way. Gaps tend to come back and fill. So when you see gaps between candles, they tend to come back and fill. They're important levels where people's orders got left behind, and there's a bunch of liquidity sitting there. And that's the whole thing with levels, is that the reason they're important is because a lot of the times there's a bunch of orders that didn't fill there, and they're just sitting there waiting to be filled still. So they become important. And so that's pretty much all we're going to talk about here, because we're going to get into other things about levels in the rest of this section. So for now, just understand that levels are price levels. They're important areas. And a lot of times when you have reversal areas, like where price comes up and immediately rejects, this whole like candle can be kind of an important area. And that's why I was showing that rectangle before. If I draw another one right here, just on these candles right there in between. See, there's a gap, this big block here. Basically, there's the body of these two candles. The price came up, that area right there, tapped it. So there's a gap here. There's kind of a gap. Some people call it you'll hear some people talk about a fair value gap. That can be a fair value gap. So basically, the candles will try to come up and fill within the orders in here, because there's an imbalance where it just shot down. There's a bunch of orders that didn't get filled. And so that's why those become important areas. So that's a level. And you can see down here even, after a lot of times, you'll get these spots like this, where you have this candle that was the pivot point, and it never quite came back to get it. But if it did, it probably would have had some reaction in that zone. Becomes an important area. So just keep that kind of stuff in mind. Levels are important. You'll see them over and over. You got to be aware of them. And other things like EMAs, trend lines, they will create levels for you as well. So we'll go into the next section now. All right, everybody, welcome to the section on support and resistance. So support and resistance is a type of level, and all that it really means is that you have either a support, which is a lower area, or a resistance. Whenever you draw a range, which is this consolidation, a range, we're going to go over more in another section. Whenever you draw a range, the bottom area is the support, and the upper area is the resistance. And the midline is a minor level. And you can see that the midline does come into play sometimes. It's a minor level. But the top is a resistance, and when the price is coming there, it's bouncing off of it right here. That one is this wasn't a very good example of a resistance, but it is a good example of a support because we bounced here 1, 2, 3, 4 times. We bounced off this resistance, or sorry, this support. And if you draw the line even off these very serious lows, we have a 1, 2, 3 triple test. And triple test tends to be a significant support that then usually goes in the other direction. A lot of times, if the market tries to do something 3 times, and then it'll fail the other way if it can't make it through on the third attempt. So that's called a triple test. And so what'll happen is, you'll have these areas on your chart that you can just see with your eyes. Like this area didn't get tested again, but it would probably be a possible support if we came back to it. This one that had 3 touches right there, possible support if we came back to it. So it's hard to now, and also when you have a trend, right? So if we drew a trend line here, not the best trend line in the world here, to be honest. Just see. I know earlier that we had a bigger trend that was working, so I'm just trying to remember how we had this drawn, just so I can. It's not going to be the best trend, so what I'm going to do is draw it from. I think we did have one working. Yeah, that'll work. When you have a trend line, it is a diagonal support and resistance. So what you have here, and you can see, basically, when we came back to it, it was a support. It bounced off the support. And then when it came back again, it bounced off it again. Not very far, but it did bounce off it. And up here is the resistance level. So if you came up, you'd expect that we're probably going to reject off of it. Now, of course, that one isn't super strong. Sometimes the trends tend to be a little bit more obvious than others. Earlier today, we had some pretty solid price action that showed some of this, like this right here. You bounced off of that support multiple times on the way up. Let's check the downtrend. And I'm going to show, there's going to be more sections on this later. Not always perfect. You can see here, it was a resistance. Here, it was kind of a resistance. It did fail back in. Here, it was a resistance again. Here, it was a resistance again. And it's possible that the trend was just a little bit, it's probably more like that. But it does work as a resistance on the way down, too. So, support and resistance. This area here, our close price, that became a support. When we came above it, came back to it, it was a support. That closed that dotted line, it was a support. After we broke above it, it became support. It wasn't even resistance. We shot right through it. Just was a support. If we go back to a day where we're not really trending as much, let's find a day where we're not trending as much. Because I think sometimes it's, I don't have it. I don't want to have to reload the data that far back. Annoying. All right, let me do this. I don't know why that was on 30 or 3. That wasn't supposed to be. Let's go to 30. We need more data here. Might take a second. All right. We're just going to go back to a day like this where we're not trending so much. Okay. So here's a day where we're not trending as much. And for me, I can pretty much visually see that there's kind of a range here. Maybe it's a little lower. Something like that. Arguably. So right here off this low area, we came down and this was a support. And then we came up through the minor level of the midline, came up, and then we hit resistance, which before was a sticky point. Now, this isn't perfect either, but within here, there's kind of some micro areas of interest. So this level to basically right here is kind of an area where there was a support here, here. Here, I can even bring this back a little further. Basically, starting here, this bottom level was a support. Even here, it kind of tried to get back in, but eventually it did reject. And it went back down all the way down to those lows. And up here, it was a resistance. We were rejecting it every time we came up to that level. So there's the rejection, support and resistance. Eventually it breaks, and when it breaks, sometimes it becomes, when a support breaks, like down here, it can become a resistance. So it couldn't get back in. It rejected off. You can see that. It just rejected down afterwards. But eventually it did break back inside. If I scroll this over, you can see we had a hard time right here, but then, sure enough, we broke back in. And here, even though it looks like it was going to break below, it was a support again, and we were back in. And if you keep scrolling over, I'm sure that this range came into play for the rest of the day, and it did. And here's the thing. It could have just been that I had this, that the reality was a little lower, which that actually fits even better. And it's totally a support down here every single time. Even there, it was still a little bit of a support. It did break through at one point, but when it came back, it became the new support. And the midline was a factor, but really the range kind of had a downward bias. I mean, you can just see that by looking at this. That what the heck was that? That was weird. Okay, whatever. It's probably because the market's closed. It was like trying to connect with a different account than my Ninja brokerage or something. I don't know. It did something weird with one of my with the sim account. But you can see that there was sort of a downward bias overall. This isn't a perfect trend line, but you can see that it is kind of a resistance as it went down. So I just want to call that out. There are support and resistance, and they are significant things that can happen. And they're important to note because if you're trading in real time and and you see that there's kind of a resistance level up here and like we're having a hard time getting through this level, well, don't take a trade straight into it because it's not really working out all day and you're probably going to get burned. It's just not a good idea a lot of the time. But if you come off of it and reject, maybe it is a good idea to take that trade the other direction. So that's the whole thing with support and resistance. So there's not really too much else to cover here on this. You'll have to decide what makes a level significant and what doesn't. You'll start to learn with experience. Like a lot of times, like these closes become important levels and have support and resistance, daily levels. You go to a bigger time frame like the 10,000 tick chart. You'll see here like that area is probably going to be a significant area. This area might be significant. Some of these big pivot areas can become support and resistance zones. So keep that stuff in mind and watch it in your trading. You just want to know if you're trading within an area that you don't want to go long right into resistance and you don't want to go short right into support. So that's pretty much it for that. And I'll see you in the next section. All right, we're going to talk about trend lines. But before I get into it, one thing I did want to mention, I forgot to say this on the support and resistance section, but I think it's important to note. And what that is that when you're dealing with support and resistance or levels, one thing you need to know is that most of the time, if you have a range or something, or a level, let's just say, a lot of times a breakout of the level will fail. So, what do I mean by this? Let's go back and take a look at an example here. Here's a resistance. And resistance and support are just horizontal trend lines, right? They're just trend lines that are horizontal instead of diagonal. So this area here was a resistance. And what happened when we broke through it? It failed and came back in. Most breakouts will fail. So in trading, you're going to hear people talk about, oh, as soon as it breaks out, go with the breakout. No, you get burned doing that. Look at this. you tried to go long right there, it went up for a second and immediately reversed on you and you would have gotten destroyed. You're going long way up here. Your stop loss has to be huge in order to deal with that. So it's not worth it. You have to note that most breakouts will fail. And even if you draw off of the lows, here's an example. I just drew these as a support. Down here, when we broke below it, it failed. And that would have been a good place to take a long trade and follow it. Because we're not going to go short here. We know the breakout's probably going to fail. And it does. Just like here, we can go short. We know the breakout's going to fail. And it does most of the time. There's even a lower high where it comes in. And you could even go short there. Another one. Over here, it breaks down. This isn't a good signal bar, but it fails back in. And most breakouts will fail. Now, eventually they will succeed. It's not going to, obviously it's not going to fail forever, or price would never move. But just note that most breakouts fail on support and resistance. You're going to hear that concept. And with trend lines, it comes into play again. So trend lines, this is a bit of an art form when you draw these. But typically what I do is I draw them off of the lows or the highs if it's a downtrend. So if it's a downtrend, I'll draw it off the high. I usually start with the high point, and I try to get the tops of these candles where they open. It's usually best if you have a green candle in here, because then you can actually have the close price of the green candle. But you just got to see what fits. For me, it fits pretty well like this. And I usually go off the close price on that low right there. And you can see that then this trend line, you want to have a lot of touches. And you just want it to fit nice within there. And you'll learn over time what's best. And when you have a trend line, there's an important rule of trend lines. If your trend line is correct, almost every time that you get a breakout of the trend line, so if it's a downtrend and you get a close outside of the top of the channel, right? If you get a close outside of the bottom of the channel in a downtrend, it usually is what's called an overshoot. Either it means that your trend line needed to be wider, or it means that it was an overshoot and the price went too far. And usually that means it's going to reverse the other way because it's just overdone. But in a downtrend, if it breaks out of the top of the trend and it closes like this outside of the trend channel, and even if this is slightly over, this is a candle is closing outside of the trend channel. What that means is that usually you need a new extreme. Now, when I say new extreme, if it's a downtrend and it closes outside, the breakout will fail and it will actually make a new low first. So the trend it's similar to when a breakout fails out of the top of a range. It will usually reverse back in. Same thing, if it's a downtrend and it breaks out of the top, it's like a failed breakout, and it usually comes down. So in this case, though, if you get a candle like this, where it makes a new low and closes outside at the same time, then it might not actually make another low. A lot of times it'll move in two legs, so it'll have one more push down, but not always. Sometimes the market likes to move in twos, but in this case, you don't always get that. And so in this case, we'll find some that look a little bit different where it does do exactly what I'm saying. So just so that you can see what I'm talking about. So let's try to find, these aren't like strong trends over here, but you'll see it play out. Here's an example. That one is a close outside. Yeah, that's not the best example. All right, let's see. Here's a bigger downtrend. So let's draw this bigger downtrend so that we can actually see this in real time. Okay, here's an example of what I'm talking about. This is a strong downtrend right here. You can see I drew it off that high. Zoom in a bit. I drew it off that high, and why did it tried to move on me there? I'm trying to draw it off of this close price, that close price, and it connected to that close price, so you can tell it's correct. Bounced off of it here. The midline is coming into a play where you can see it working off both sides of the midline. And then what happens is down here, we finally get a close outside. It's not a very convincing one in that first candle, but that second one's definitely a convincing close. So this breakout fails though, and it makes a new low first. But you can see here how it makes two legs to a new low. So you get a new low here, but there's another leg that goes down, and it goes down even further than the other leg. It's not even measured. So you can see we get the close outside, but this breakout doesn't just reverse and go up. It fails first, makes a new low, and it even makes another leg down to a new low down here. And then we get a little bit of a bounce. Now, in this case, what you can actually see this as, because that's the small time frame look, on a bigger analysis, that's your two legs. It went a little further just because of how strong this move was, but you can see that there's a couple of legs here. Really, it's just it went sideways after. Like it made the new low, and then it kind of struggled, but it didn't reverse right away. It faked everyone out. And that's because most breakouts fail. So you got to note that. Most breakouts fail. Just always know that. And when the trend goes in the other direction, so let's draw this one, something like, let's see. This one is, it's a little bit, I'd say that it fits pretty nice right here, like that. And again, it's a little bit of an art form that you'll develop over time. But eventually we get a close outside. This isn't a close outside. This is still within. But you get a close outside here. And then what happens? It comes down a little bit, and then it fails. It doesn't just reverse. The breakout fails, and it makes a new high right here. And this is another one where you get a new high, and then you get a second leg to a new high that goes all the way up to here. And that's your two legs. So it looks, they're not measured legs, but you have leg number one, leg number two. It ends up going higher a little bit to that high, but that is leg number two. And then it reverses. And you can see that then we do get the lower high, and it drops down, and it gives us short-term downtrend, and then this uptrend kind of resumes. But that's important stuff to note. Now here on trend lines, what we're going to look for. So I remember when we were trading this. So you had this spike up, right? And then you got a close outside and a new high. So once you get the close outside of the trend, out of the bottom side for an uptrend, it's a failed breakout that then makes a new high. That means it's played out. Now again, sometimes it happens in two legs and you get another leg up sometimes. But once you got your new high, you know that you've played it, it's played out. Now in this case, we actually had a spike in channel. I remember trading this day. So it looked something like, it kind of fit like that. See, like, this is the thing. I'm going to draw it like this. This here is not a convincing close outside. Okay, that's not a convincing one. Because what it really means is that the market might have just been shaped more like that. I mean, like, it really needs to be more obvious. Like, if the trend looked like this and you had a pretty big close outside, that's different. But you need to know, like, you need to know how to gauge that. So if this is a spike and channel can happen. So after the first uptrend broke, it then went into a flatter channel. So this is still a support and resistance at the top, support on the bottom, and you still play this like a trend. Now, when it finally breaks out of the bottom side, what are we looking for? We're looking for the breakout to fail, and we're looking for it to try to make a new high after that happens. And it does do that. It takes a minute. What it does is it actually comes up, pulls back, comes up, pulls back, and then it goes. And it makes a new high right on this push up. And then at this point, it's not within the trend anymore. So now what this means is that we've had a break. So now what we do is we actually look at this as an entirely new trend. So what you would do is you would maybe grab off of this low and you start to draw a new trend line. And I don't have the whole screen zoomed out, but you'd start to draw a new trend line. And what I'm doing here is getting it off of the close, get it off of these lows, get off that close. And I need to zoom in so I can expand this and see if this trend is pretty good. So this trend was now in play, and you can see it worked really well. Like it was staying within, so we can look for trades in there. Eventually it breaks, but what happens? It breaks out, and this break becomes a failure, and it ends up making a new high. This will happen over and over again. And in this case, it actually formed a slightly flatter channel even again, which seems to be the trend lately. No pun intended. All right, so this one broke out the bottom here. Now again, here's something to note. If this is the channel and it breaks and makes a new high, and this one made actually 2 more legs to another new high. If it's just making the new extreme from the original failed breakout, and it does, you don't always expect it to then break this one and then make a new high again. Because this, it's kind of like what they call it, like the retest, the new extreme, or down here. If another, like, if it forms a trend on the correction, right? So like, here's an example. If it forms a trend that is correcting to a new high, even though this breaks and makes a new high, that's not what you're necessarily looking for every time, because the new extreme is just the trend line rule being respected. It breaks out and it wants to make the failed breakout attempt back to the new extreme. So hopefully that makes sense. So in this case, like on this channel, I wouldn't have been going, okay, we broke out the bottom, we need to look for a new high again, because we've already made the new high. That already played out. And so what I would be looking at is when this downtrend happened, I would actually be looking for this to make a new low when this downtrend finally broke. And it does. It closes outside right here, maybe on this red candle, maybe one of these. It depends on how you draw it. But it closes outside and it makes a new low. And that's what I expect. And then it reverses. Now, once it reverses from there and starts making a new uptrend, again, you start to consider, okay, maybe there's a different uptrend in play. We need to try to draw this thing out again, because this has just been such a bullish day, and it seems to be keeps creating these uptrends. And what happens? Now this is a new uptrend, because this already played out, and it comes up, it closes outside here, moves up, comes back, makes a new high. That played out. And you can see after it played out, now it's going down again. So then you start to figure out, okay, well, now what? You got this downtrend working. 1, 2, 3 touches. Usually 3 touches on the top side of a downtrend confirms it, and 3 touches on the bottom side of a uptrend confirms it. That's typically how I look at it. 3 convincing touches. Usually, if it's like these closes like that fit really nice, that's even better. And what you get here is you get this working, and then it breaks out. Now here's something to note. It's not always going to make the new extreme, because sometimes breakouts do succeed. So in this case, when it broke out, it tried to pull back, it came up, it tried to pull back really hard, but then it couldn't make a new low. That tells you that there's too much bullish pressure. And you can see, even down here, it tried to do it again right there, and it just couldn't do it. So when it really fails here to make the new low, you can see what happens. We go boom, higher low, and then we're off to the races again. And we actually form a new uptrend again. Because usually if price fails to do what it should, it will reverse very harshly in the other direction. And that's, and you can see it did that. So just note that stuff. Sometimes it won't make a new extreme, and it will succeed, and it will do. And when that happens, usually it's gives you some really harsh price action after. So let's look at this one. Let's just see if we have an uptrend here. It's decent, I guess. I mean, it's not. You could argue that there's possibly an uptrend like that, but this is not that convincing because it kind of just fails right away on that one. So I don't really love that. I think when I was doing this one, I forget exactly how I started the day with this one. I think I started it from down here, and we had a possible uptrend that looked like this. But then I remember thinking like there could have been a wider trend in play, something like this, in which case this is the first break here, and it doesn't make a new extreme. It goes sideways, but look what happens. It does get there eventually. So on a bigger context with a wider channel, it sometimes takes longer. it does still make the new extreme here. This breakout does ultimately fail. It just becomes sideways action for a little while. Typically, you're going to see the things play out much faster in short-term trend lines. So, if you have a short-term trend, like this downtrend right here, right? This one probably looks like that. You get a close outside, new low, second leg down. It kind of goes sideways a little bit, but that plays out really fast. Like that's over. Is it possible that there's a wider channel here? I mean, it's possible. Does it fit? Let's see. That's not convincing, too convincing for me. I mean, I guess you could argue there's a possible wider channel there, but it doesn't matter. It still plays out. Breaks out, fails, goes to a new low, and then it reverses. You're going to see it over and over again. This is the trend line rule, and it's why the way that I trade with second entries makes sense, because market moves in twos, most breakouts fail, and so you're going to see that all the time. You're going to see here, this one is a pretty nice trend, breaks out the bottom. Now again, with a wider channel, it takes longer and does play out though, as you can see. Eventually, this breakout fails and it goes up. Now, what's interesting here is when this happens and the breakout fails, or the downtrend does something like this, so you start to see that we're possibly going to get some kind of a channel like that. What happens? Breaks out, pullback, new low. So the breakout of the downtrend fails. Now, this downtrend is played out. Now it starts to go up. And what does it do? It makes the new high that it was supposed to make for this one over here. You got to watch these and understand that. Now the thing is, I'm not going to go like this and make a downtrend here. I don't usually draw the retest of the trend because it doesn't really need to happen. Like, I know that all that's happening here is we're trying to make the new low after the downtrend broke. I know that. I don't need to draw another downtrend and see if that one plays out, because it's not always going to work. That's just not how it goes. It's going to take its couple of attempts to try to make the new low and basically have the breakout fail. Here's the uptrend. Breaks out, goes up, makes a new high on that one, which is going to play out because it's another new channel. And it's the new high on this one, and now this one also has the new high. This one ended up creating another trend, which it's been a trending week, so this is some good examples for trends. This one's not great. I don't love this, actually. I don't love the way that this is. Yeah, I mean, I'd say this one is questionable here. To me, you don't really get a very convincing one. Maybe it's like that. You get a new one that's working like this. It breaks out the bottom, makes a new high. Because this is just sideways over here. Anyway, that's how trend lines work. You gotta remember, we play short-term trend lines as well a lot, and you see them all the time. You always want to draw your short-term trend lines when they're working, and you want to see what you get. You want to draw this. Okay, we get a close outside, new low. Like, you'll see it all over the place on charts. Even here towards the end of the day, you have this very slight. I'd say, yeah, kind of fits. This one, get a close outside. Eventually, it makes a new high. Like, they play out over and over again. The trend lines tend to play out, so they'll help keep you on the right side of trades. And you gotta just get in the habit of drawing these things all the time on your charts. This one isn't perfect, but you get the idea. This one didn't make a new high afterwards. But that one, again, like I said, it's not perfect. It's sometimes possible that there's shorter term trend lines that are within. It's not, you don't always want to go for the wider channel. Sometimes it's actually just a tighter channel. So in this case, actually, it probably, yeah. So as you can see, this one was interesting because it's actually these are shorter channels, close outside, new high, pullback. And there seems to be some sort of a possible, maybe there was a possibility that there was a spike in channel here, but I just don't think it really fits that well. Yeah, see, it breaks right through. So this just isn't very good. When it's like that and it's not fitting very well, you just want to play the tighter channels. And even the tighter channels, close outside, new high. The corrections aren't always going to work out because it's an uptrend, so they're not always going to get a new low on the down. But if it's overall bullish and going up, yeah, here's another one. I'd say it's kind of like that. Close outside, new high. So you can see they just play out over and over and over again. I know I sound like a broken record, but that's because I want to get these concepts to you. Here's another one. This one's a close outside and a new high all at the same time. And it makes a second leg and then it reverses. You'll see those happen quite a bit, actually. Another one. Close outside, new high, reverses. Kind of goes sideways on that reversal, but you can see this did play out. This is actually a trade that I marked in one of the videos because it was a first entry, second entry short, and it was a close outside and 2 legs to a new high. So that was actually a really nice short. So anyway, that's how trend lines work. Hope this is helpful, and I'll see you in the next one. Welcome to the section on advanced market structure context. So when I say context, you're going to hear that word a lot. Context for trades. Now, I'm going to teach you how to identify things like second entry longs, failed breakouts, triple tests. But you don't just take these trades whenever you see that setup. You have to understand the context of the chart. So context is crucially important. And so in this section, we are going to go over trends in a more in-depth look at how we identify trends and how they play out. Then we're also going to spend some time on ranges and then also on reversals. Now, I know that earlier we already did talk a little bit about market structure. And we did talk about trend lines, but so there will be a little bit of repetition here, but for the most part, this is going to be within the context of trading. So just to give you an overview, whenever you come in for the day, so here's the day's price action. The market closed here. It's 6 at night here, so it opened there. So if you go back and you look at what the market would have looked like when you came in. So let's just say you're starting your day. And I'll turn off my cam. It's going to look something like this when you come in for the day, right? This is at 5:30. So let's actually go back a little bit. Let's say, what's that? About 5 in the morning. Let's just say you start around 5 in the morning Pacific time, which on the East Coast is about 8 in the morning before the market opens. So it's like an hour and a half before the market opens. So this is what the market would look like. You have yesterday's price action. This is the overnight session. And so right away, what I see here is there's a slight downtrend, then there's a slight uptrend, then it comes back, then it goes up. So this is a range. How do I know that? Well, price is making lower lows and lower highs here, as it does in a trend, until it's not. Now it's making higher highs and higher lows. Now it's making lower highs and lower lows to here. So if you try to start drawing a trend line, you could say there's maybe some sort of a downtrend channel. It doesn't even really fit that well over here. Not even fitting very well. And then, of course, there's sort of an uptrend that looks something like this. And then you have this downtrend, but it doesn't go very far. So none of this really connects. You see what I mean? If you try to connect it from the highs across, from, let's say this high across, it does slope down a little bit, but it looks like a range overall. Like this isn't really a trend. This is, sure, it has a lower high here, but it's mostly a range. And what fits better than any of that stuff is probably to draw something like this and to realize that we're mostly going sideways right now. You could even argue that there's actually a range that's down here. After this opened, it kind of looked like this and just went sideways. So then when it starts to move, now there's a data release today. So it shot up like crazy because of the data release. So what you would do is go, okay, now as this develops, the market structure is changing. The context is changing. Now you're not necessarily going to find much of an uptrend like this because as you can see, it just explodes straight through the top. So you're going to kind of monitor this. And what you could do is draw your shorter term stuff. And you could go, okay, well, there definitely is some sort of like some sort of a trend, sort of an uptrend there, but possibly. But overall, as you start to develop some more price action, what you would do is likely see this as we're still pretty much sideways with short-term trends within it, right? There's short-term trends that are working here. And you can see those, and your eye will learn how to spot these over time. And what I would have looked at is, okay, we possibly have a big range. You can see here, there's another micro range within here. And it possibly like this. There's a range there. So we have little bits of context. And as this type of stuff develops, now let's just actually go back a little bit here. Let me just circle back a little bit. So this could even be a failed breakout. Could be a failed breakout right there because it actually fits off those lows pretty nice. So as the market opened, which is right around this candle right here, 630. So you would have had, okay, you would have known, okay, we had an uptrend, a break, move to a new high off the top of the range, downtrend, break, new low, and now we're going sideways. And so within this sideways movement, you can see that eventually we come up off the top of the channel, we come down, and we have a failed breakout here. 1, 2, triple test, failed breakout off the bottom of the range, plenty of room to the high. So this would be a long trade right here. And I'm going to zoom in so that you can see this. So this would be a long trade. I know that because of how we look at ranges. So even though there was a trend, this is not a trending day. This is a range day. It's really inconsistent price movement. It's mostly sideways, and then you would have entered a trade there, and you would have had a winner. And then this looks like a short. Now, obviously, I'm looking at it after the fact. There's a short here off the top of the range. It's a 1, 2, triple test. And I know that. Now, once it breaks below here, and you kind of have this downtrend, break, new low, then it reverses, and then it turns into a stronger downtrend, you're looking at this differently now. You're looking at trending trades. You're not looking for range trades. And so when you get something like this, you kind of have this downtrend working, which technically gets a close outside right here and a new low. And then you have a higher low here. That is a long trade. And I know that because the downtrend played out and you have a higher low. And it's working within a possible new trend channel. It looks like something like this. Over here, when it broke out, you kind of had this downtrend off the, and I showed you already had to draw these. Close outside, new low. And then it reverses. It does give you this here, which technically, if you would have expanded this out and realized that the low of the range might have actually been this low, then this is another triple test, possibly a little bit riskier, but possibly a down short there. And I know this based on price action rules. Now, we're going to get into the overall context of how you identify these in each one of these sections. So basically what you're going to do on any given point of time, no matter what kind of day you're having, if you're having a range day, when you're within the trend, so when price is doing this, you follow trend rules. When price is doing this, sideways range stuff, you follow range rules. Now, reversals are like this. When prices has a trend, it gets a close outside and a new low. The downtrend is played out. So when you get a higher low, that's a reversal, and that's another trade. That's a trade in the opposite direction. Not counter trend. It's a reversal of behavior of market structure, good, and it goes the other way. And then you have a micro range here. You can just see it just by looking at it, but it's always better to draw stuff. You kind of have a micro range working right here. Something like this that you kind of get stuck in for a second. Eventually you break out of it. Uptrend, break, new high. Downtrend, doesn't break and give you a new high. And then you have an upward trend. So at this point, later on in the day, you kind of had this uptrend that started to work. I think I remember it fitting something like this off of here. It was something. This isn't perfect, but it was something like that. And basically, you kind of had this. It didn't confirm till over here, but you kind of had this uptrend, and it might have even been a little bit. I think originally I might have had it off the close. I forget exactly what fit best. It was something like, I think it was something like that. Yeah, I think it was like that. And then this was, high was up there. And you could kind of see this did work out pretty well. And so now you knew that you had this overall uptrend. So you do still identify ranges within it. And you be careful during those ranges. Like when you get tight like this, you have to be careful taking trades. So you do still identify that. And you still have to identify short-term uptrends within the trend because they still play out, right? Like when you have like something like this and it still gets the break and the new high, they still do play out. You still have to identify the structure, but overall you can look for the bigger setups. And today there was some of those. Off the top, there was a short there. Even in this, and so you can take a short in an uptrend when it's like this, when it's a wide uptrend, or those reversals. There was also down here. I actually took this trade in real time. Right here, it doesn't look like there's that much space, but from the top of this candle to here, wait, that's not. Sorry, that's not the one. No, that is. I'm just trying to remember where it was now. I don't know if that was the trade. I think this was, but the market looked different earlier, and now that I reloaded my chart, the candle is slightly different, which I forgot to mention that does happen. But I did take a trade there earlier. It was a long. It was, if you go back and watch the YouTube video, this is November 13th, 2024. If you go watch that video on my YouTube channel, you'll see the trade that I'm talking about. I think it was this one, but the bar looked different. And I ended up getting easy scalp. So I'm just going to mark it because it's a second entry. No, this is different now. Yeah, unfortunately the chart looks different now. I can't stand when it does that. It reloaded different, but there was a second entry in here somewhere that I took, and it was a really nice trade. So anyway, off the bottom of the trend line. And it's because I identified the context. And there's a bunch of trades all throughout in here that you could have taken as they developed. And you would have been thinking mostly long because it was an uptrend. But there are some shorts still, and when it finally broke and it developed into a sort of downtrend channel here, something that looked probably like that. As this was happening, there's a short here. As it came down, you were identifying now we're on a bearish structure. So you're even though there was an uptrend, now there's a downtrend. It's a range day. So we're still within the range. And the range had moved at this point, and the range highs eventually I had moved up a little bit. I think I had moved them. At one point they were down here, but I think later on in the day I ended up moving them up. So you're still within this giant range that looked something like that, with the lows all the way down here. And basically this was a move down back to the midline, which then eventually broke and then went back up. And basically what happens here is as this came down, some things that I know about ranges is once we broke out, we're going to make a new low. And now that we made a new low after breaking out, so we broke out, we got a swing down, pull back, another swing down to a new low. So the downtrend is played out. So on this higher low, we trade that as a reversal, and that's actually a long. And you can see this was a really nice setup. And then what you would do is you'd probably draw a tighter channel. And if you took this trade, could have rode it all the way up. Eventually maybe exited somewhere right here, or maybe after we get a breakout, a close outside of the channel, which would have been right below this bar right here. So maybe exit right after this bearish bar. And if you did do that, and you took that and you got a nice runner, which you would have got a runner on this, there's like 9 points there. Probably would have got 9 points on your runner. That's a huge, huge runner. So context is everything. You have to identify the shifts. And so after this close, this is a close. Technically, if you look at this, this channel was probably kind of like this. This is technically a new high and a close outside. But you could argue that the channel is more like this, and this is the first break. But we still get a new high. Either way, it plays out the same way. You get a close outside, and you get a move to a new high. And then that has played out. And then over here, there's another downtrend. This is kind of like a giant range in here. But what you would do is you would play these as trends. And you would follow trend line rules. So same thing here. As it comes all the way down and you get a close outside, you expect a new low. And then you look for a possible reversal. Now, this one, you don't get the best type of reversal because you get a bullish candle. And you get an equal low here that then turns bullish. So you could usually treat these kind of like higher lows, but it's a little sideways, so you need to be careful. But that is a possibility. You're far away from the EMA. The downtrend has played out, but it's not 2 swings down. So I would say I marked that one, but you'd probably mark that as a little riskier because there could be one more leg down in this. But that's the type of context that we're talking about. And you'll learn these as I talk about them over and over in my videos. So I always cover this kind of stuff in the videos. And basically what you're going to find is that there's a lot of nuance to how we look at the market. Yes, it's a range day, but you don't just wait for it to come up and short and wait for it to come all the way down to the bottom and long, because you have to trade what's happening within this whole entire piece, all the price action. So every day, you're going to come in and try to identify what type of day we're having. Sometimes the day will start out as one type of day and turn into another type of day. It's not always just a trend day, not always just a range day. Sometimes you'll get what's called like more of like a mixed day, where it's a trend for a little while, it's a range for a little while. Like this is a range day, but it's kind of mixed because there's ranges and there's trends within it. And this was kind of a trend, but it was a weak trend. It was kind of a rangy trend. It wasn't a strong trend. A lot of times on a strong trend day, the whole day will be trending. So you will get those days. Those are the best ones a lot of the time. Or just range. Sometimes range days can be really beautiful when they have consistent highs and lows. When you get ranges with inconsistent highs and lows, it can be a lot tougher. So you'll learn all that, and we'll go over that more as we get into the next section. And I'll cover range rules, trend line rules, and reversal rules in the next section. And then after that, after we get through this whole segment, that's when we really get into how you're going to be executing on these trades and what you're actually going to be doing as you identify these types of setups. All right, everybody, you made it. This is the section price action trading execution. This is where you're going to learn how to actually go and execute all these trades, everything that you need to do to execute the trades on NinjaTrader so that you can hit the ground running. But before we get into all of this, and by the way, this section is going to be broken down. There is a lot here. So this is the longest section of the course. It's all broken down. You've already seen the table of contents. And it just make sure that you go through everything step by step. I can't stress that enough. Don't skip around. You might have to repeat certain videos more than once, and that's okay. But before we get into it, I want to do another discussion on this because I covered this a little bit earlier, but I want to make sure that I'm really specific about it. So when you start trading here, you're going to be trading on a sim account, a simulator. We talked about this earlier with not risking your real money. You're going to be trading with a sim account. And You should be doing that throughout this process as you learn trade execution. Don't try to go and risk real capital. It's just not a good idea. You're just going to get burned and frustrated. And it's not worth it. And I know that it's going to be hard because you're going to have simulator times where where maybe you make $3,000 in a day on the simulator. And you're like, wow, if that was real money, I would have made $3,000. And there's going to be some of that will happen. But you still need to do it. You still need to get into the process. Now, what I want you to do is trade on the simulator with the amount of money that you would actually be trading with on a real account. So if you're only going to be starting your trading journey with about $1,000 account, trade your simulator account as if that's the amount that you have. And we'll talk about risk reward and all that stuff in the next few videos so you can figure out how to manage that with your account size and everything. But I just want to be specific here to try to make it as realistic as you can with your simulator account. Now, down the road, once you're profitable on your simulator account, like let's say you double your simulator account and you just keep growing it and you're consistently hitting your goals, and some people are going to pick this up faster than others, and they're going to, maybe be profitable on their simulator in a week or 2 weeks or 3 weeks. Some people it's going to take 3 months. Some people it might take longer. It just depends on how much you put into it and how dedicated you are to following the strategy and the rules. And again, you're also going to be tested on your mental game, and you're going to probably have to go back and review that. But after you get to a point of profitability on the simulator, the next step is going to be to trade the micros. It's not going to be when you first start trading with real capital, it's not going to be that you just immediately go into trading the ES. You're probably going to start with the MES, the micros, because they're 1/10 the size of the ES. And so if you're trading on the simulator with, let's say, 5 ES contracts. Well, when you start trading, you could start with 5 MES contracts. It's a much smaller, lower risk as you get used to real money trading. And then down the road, you can start to increase that. And eventually, when you get to the point where your size starts to get larger, then maybe you can shift to trading the ES with 2 or 3 contracts. But you want to ease into it. And with the MES, I talked about this before. I trade the 2000 tick chart on the ES. With the MES, you need to trade something like the 932 to 1000 tick chart. You'll have to do side-by-side comparison because it's somewhat variable, but you want it to look almost exactly like the 2000 tick ES chart. Usually what I do is I just look at the 2000 tick ES chart and I have a second tab for my MES chart, and then you can execute trades on the MES chart, but you can watch it on the ES chart. I find that to be a good way to go. There's some different ways you can do it, but you can also just look at the MES chart as long as you get your tick size to match up pretty close. And second entries and all that stuff, it's all still applicable. Usually somewhere around, I think it works out to be about 930 or 932 to about 1,000. Maybe it's 950 tick on the MES. Something like that will line up with the 2000 tick ES chart. You'll have to play with it because it's kind of changed over time. So look at like anywhere from 900 to 1,000 tick MES chart. See if that lines up with the 2000 tick on the bars. If it doesn't really line up, you might have to try, maybe it's a little higher. Maybe it's actually like an 1100 tick MES chart, something like that. There's just less volume, so you need lower tick amount on the MES for it to line up properly. If you do a 2000 tick MES chart, it's going to be like watching paint dry. So just don't do that, in my opinion. And so I just want to call that out right now. Make sure you're aware that you really hold to this. And over time, if you find yourself, when you get to the point of trading with your real capital, if you find yourself breaking the rules and messing up on your mental game, stop what you're doing, go back to trading on the simulator and analyze everything. And we're going to get to this in section 9 of the course, where we talk a lot about refinement and how to hold yourself accountable, and to conquer the mental game, and to kind of go back to that. You're going to talk about that in the section after this. So the rest of this section, section 8 of the course, is going to be all about how to actually go in and start executing the trades. So we're going to get right into it in the next one. We're going to talk about risk reward in the next session. And then we're going to start talking about actually managing the trades. And then later on in the course, on this section, there's going to be live trade examples. And as I, record more and more of these, I'll add different live trade examples with different account sizes. That's something that I'm doing on purpose, is I'm showing how it looks with different contract sizes. And so I'll be adding those sections and adding more to the course over time with just live trade examples, how to manage it and all that. But we'll be getting into this we'll be getting into the trade management right after the risk reward section. So I'll see you in the next section. All right, we're going to talk about signal bars. Now, there are other rules that I wouldn't say are price action rules, but they are strategy rules. And one of them is on signal bars. So a signal bar is the bar that you're looking at for entering your trade. Okay. So if we were going to be taking a trade soon, this bar that we're on is our signal bar. So we'd wait for this bar to close. That's our signal bar. And that's the bar that we're using for our trade entry. It's part of our process. Now, in order to enter a short, we need the signal bar to close in the bottom 1/3. So if you were to look at this signal bar right here, now let's actually just use a different bar. Let's say this green bar is our signal bar. So you have the top right here. You have the bottom right there. And then you kind of have like the middle right here. So as long as the bar closes around this level right here, that's like basically the upper 1/3. And that would be a bullish enough bar if we were going to take a long. And for a short, it's the opposite. It needs to close in the bottom 1/3. So this bar is looking like it's going to close on its low. So that's definitely qualifying as the bottom 1/3. That's a very bearish signal bar. But we're not taking a trade based on just that. But that's part of the process. Here's an example. These ones I marked off on the last video. This is a bullish signal bar. It closed at the high. So it closed in its upper 1/3. This one closed in its bottom 1/3. And that's at the low. This one closed near the high and still in the upper 1/3. That's a good signal bar. If the bar looks like this, it's a doji. It's not really closing in the upper or lower 1/3. It's closing somewhere in the middle. That's a doji that doesn't qualify for a trade. So there is a signal bar rule on our trades. Now, the only exception to that is a more advanced setup, which is a failed second entry. That one, we don't care as much about the signal bar. But that's more advanced, and that will come later on. Now, the other thing with signal bars is we don't necessarily want engulfing bars most of the time. And if we do get an engulfing bar, it needs to have a certain setup. So what do I mean by engulfing bar? An engulfing bar is like this red bar. The whole bar engulfs this second bar. So you can see its higher, its high is higher than this bar next to it. And its low is also lower than it. So the whole bar engulfs this bar, which means that in real time, what probably happened here was this bar opened here, it probably went up, and then it reversed, and then it closed down here. That's a full-on engulfing bar. Now, those can be really nice setups. This was a really nice short, actually. So that's important to us. Now, inside bars, we don't like inside bars for most trades. Now, what's an inside bar? An inside bar is like this red bar right here. This whole bar is inside this bar. Doesn't mean that the trade is disqualified, but it can lead to congestion. So you have to be careful with those. Now, if this bar was like lower down here, then it can lead to congestion. So we don't always let ourselves get entered into a trade if we have inside bars. Just depends on the context. This was all pretty bullish right here, so I thought this was fine. But that's an important thing to note. So we want to look at this. Okay, so here's a bullish bar. So now right here off the high, first entry long, now it's pulling back. Now it's getting late in the day, so we're getting some volatility here. So the first entry long, it's going to pull back. Let's see what it does here. This might be the reversal. We're back below that resistance area that I had drawn out earlier. But you can see there's a really bearish bar. There's a huge bar, 16 ticks compared to some of these other ones. So that's what I mean when I talk about signal bars. The signal bar is the bar we enter on. So if we were taking a short here, the signal, and let's say this was red bar is our signal bar, we always enter one tick below the signal bar with a stop order. And we put our stop one tick above it. So if this was a short we were taking, which I'm not saying it is, but if it was, this is how we'd enter it. Our stop order would be sitting here. So we would, let me see. Order submitted. So we'd take our stop and we'd set it one tick below, which technically, target filled. Whoops. I didn't mean to do that. Stop filled. Oops. Okay. Well, that was an accident, to be honest with you. I did not expect that. That was actually pretty hilarious that just happened. I was trying to illustrate something. That was on my demo anyway. I luckily was logged into my demo for that. I was trying to show you where you'd put it, but as you can see, it's the end of the day, so it's getting volatile, and it just kind of shot through and filled that order really fast. But anyway, that's how you enter the trade, and that's why we do that actually. That happened really fast, but that's what happens. If you're entering one tick below a signal bar, a lot of times the momentum will actually just fill your trade and fill your scalp right away like that. And so you couldn't even see that as it printed, but what that actually did was it entered the trade, immediately filled four contracts at four ticks, moved my stop to break even, and then it filled the stop at break even. So that was pretty wild, but that's how we enter and that's how we look at these things. The signal bar is really important in our trading. Now, that wasn't necessarily a trade that I should have taken, but I was just trying to illustrate how you would use the signal bar in that context. And that was also an engulfing bar as well. It engulfed this whole bar. So that's pretty much it on signal bars. They are important. We don't like inside bars. So if we're looking for a long, like off this low here, here's a good example. I wouldn't have taken this trade. This is somewhat bullish, but I would argue this is not the upper 1/3. This is about halfway. So even though this candle is red, it's still somewhat bullish, but not bullish enough. And we don't have a trade there. I'm trying to see if there's any good examples of inside. Oh yeah, someone asked me earlier actually why I didn't mark. Let me see where it is. I logged out of the platform and logged back in, and now my candles look different. Earlier, there was actually a long over here, but now it looks different. But someone asked me why I didn't mark this trade right here, this green candle. And the reason is, after we made the low, this is just an inside bar. It's not a higher low or any sort of really bullish setup. It's inside this bar. So it could just be congestion. And as you can see, it would have taken a while for that to work out if you went long on that. It ends up working, but usually it doesn't, or it just isn't very confident of a setup. Um, all right, that's pretty much it. Oh, here's another example. This green bar is actually kind of an inside bar. It has a double matching low, and then it goes up. Not really an inside bar, but that's another one. It's a double bottom. We don't really have a good swing there, and we haven't made a new low, and there it goes. And then we get this one, which qualifies upper 1/3, bullish signal bar, higher low. When it's a double bottom like that, you can treat it like a higher low, and it works. So that's what I mean when I talk about signal bars. So we had this range forming here, and there was a down channel possible, but I was really playing the range, and I was looking for a second entry long off the bottom of the range. Basically a triple test, second entry long, probably a higher low. So after this closed, I saw it set up, dropped the order, moved my stop loss right below the signal bar, as you do, entered one tick above the signal bar, as you do, and you can see there that I was just trying to get a quick little scalp here. So you can see I just need my 4 ticks, and we did have a midline and a 21 EMA, but I wasn't too concerned about it just because of the structure here. It was looking to me like it would probably come up to the top of the range. So instead of playing like a full-on runner, what I did was I just moved my runner to the top of the range channel there. So you can kind of see it right here. Kind of had to sit through it for a minute there. You can see it started to get a little bit bearish for a second, almost like there was sort of a downtrend bearish play, but I was really more confident in the range than anything else, and I was thinking that that was going to be what ended up happening here. So just kind of had to sit tight and wait for it. Now you can see that I have my ATM strategy in play. So as it fills here, it will end up moving my stop loss for me. So let's just wait and see. So right there, it bounces off the EMA. And this trade took a little bit longer than a lot of the times it does. A lot of times you get there right on the first candle, but it ends up working out. So let's just see how it goes here. Uh, and this is just part of trading. Sometimes it takes a little longer than you expect. That day, it was actually only 15 minutes or so after the open. So I'm surprised that it did take this long, but it just happens. Sometimes you have a lower volume day, and that's just how it played out. So right here, it kind of starts to try to go down, and then I think this is around when it reversed, if I remember correctly. And let's see. So there it goes, and taps the level. You see it doesn't fill right away, and then it fills. Now I end up moving my stop myself there, and the reason I did that is because it didn't tick all the way through. So I always have it set to go to 5 ticks, and then it moves my stop for me. So if it ticks all the way through, and it did there, so if I didn't touch it, it would have moved on its own. but I like to move it manually just in case if I get filled. So I just do that sometimes. You don't have to, but it's kind of saved me before when it didn't tick all the way through and whatnot. So I just do it out of habit. And there you go. It fills right at that level. And that's pretty much how I played that. And it's good that I played it like that because it did find resistance there. And that's why in a range, you don't go for like a really big runner. Now, I was actually looking to possibly get short here after that trade. So you can see here I mark off that trade as a blue because that was definitely a blue trade, a really good long. So I tried to look at this as, okay, we do have a possible uptrend in play, so we do have to be careful when there's an uptrend in play. But the way that I was looking at this was we're about to go short here, so maybe we get a first entry short and then a second entry short, I was thinking, off the highs because we tapped the high, and just like we got basically a triple test off the low, we might get a triple test off the high. So I'm thinking short now, playing the range rules. And so there's the first entry short. That's the first attempt that it tried to go lower. And so now I'm starting to think, okay, well, we might get a second entry short. Maybe it comes up, taps the level, and then rejects and gives us a second entry short. And so I think I draw a trend line here, if I remember correctly. And sorry if you hear some noise. That's just my dog in the background whining about something. So there we go. So then I draw that line up there, and you can see that we do have a trend in play. So what I'm thinking here is we don't really have a close outside. So what I was hoping would happen is that it would go up and tap the level and give us a close outside all at once. So a new high and a close outside all at once with a possible short setup on a second entry short. So that's kind of what I was looking for, but it doesn't always play out like that. So we kind of had to just wait and see. I got my order ready to see if I could get ready for a sell stop. And I always do it like this. I always set it, really far away from where I'm going to go. And then when when the candle's about to close, I just drag it up to where I'm going to be and I just drop it there so that as soon as the candle closes, I'm one tick below it and it automatically can get me in because sometimes they can gap over and you need to be quick to get your order filled. But what ends up happening here, I end up having to cancel this trade eventually because it doesn't work out. As you can see, it just double tops and then it reverses. And I just didn't think that you could take a short there because it's just too far away. And you can see I'm just checking there to see if if it did make a new high or not. And it just didn't. It ends up like kind of getting bearish and it does end up reversing and going where I thought, but it just doesn't give you a setup. You don't really get a second entry short there. It ends up just being basically this like big doji right there, and then it ends up reversing pretty soon. And it does go down, but there's just no trade set up. And that's because the signal bar needs to be strong. There's just no signal bar there. And I had to redraw the trend line because sometimes NinjaTrader can be annoying about that and it starts moving my trend line. So sometimes I just delete it and redraw it. And you can see here it does try to come up again and it does eventually reverse here, but it just ends up being like another equal high. It doesn't give you a new high. It just kind of it just ends up being like some sideways action and it just isn't really the ideal setup. And you can see that here. I really wanted it to make a new high and reverse there off the top of the range, but it just didn't really do it. So you just kind of have to sit out of this one, but it's still good for you to see this kind of trade anyway, just so that you can see how I was thinking, because you can go from long to short when you're playing the range rules. You're just ping-ponging back and forth. And it did do what I thought it was going to do. So I was reading the chart right. It just didn't give me the right setup. And you can see that here. It kind of closes there as like a doji. It doesn't give you a proper bearish bar. It does start to go down, but then I end up just canceling the order because now it's in the middle, no man's land. And so that's basically it. All right. So this next one here, we were looking for a possible setup here. And what I was looking for was a new low and then possibly a long trade after we make a new low because we have this slight downtrend working. And so you start to think that we get a close outside and we'll probably get a new low here. And you can see that we had that area where there was previous support. So I was expecting possible bounces there. It was also a previous daily close. So that tends to be an area of interest. So I started to get an order ready. And I think on this one, we had a more volatility this day. You can see there that the ATR was at 2.75. So I was thinking that I was gonna take 6 ticks on this one. And so I was waiting for this to play out. And you can see I was thinking, all right, we probably have some kind of a possible range here. And this is now at least a triple test. So once this thing closes, I'm going to end up going long. And in this case, I was going to just probably not even go for much of a runner just because of the fact that it's starting to look like a range. So we end up getting the trade right here. So I had to wait for it to actually come up and fill me. So that's the nice thing about these stop orders though, is that when you enter like this, if it doesn't fill you and it keeps going down, you can just cancel the order. And so there you go. So then it came up, and you can see I was going for 6 ticks here, and I decided to just not go for a runner and just take my 6 ticks because I was already, it was getting a little bit later in the morning. I already had made some money on the day, and I was like, you know what, I'm just gonna probably call it a day after this. So I end up just kind of dropping down and just going for 6 ticks and just saying I'm just gonna take the whole thing at 6 ticks here, and it ends up filling right there. So you can see that was a pretty good move. I could have got a little bit more on this one. I wasn't going for a runner again just because of how sideways it was looking. And you can see that there was a midline there, so I was just thinking that it might start to reverse on me. Now, I would have gotten a lot more had I just let the 6 ticks play out and went for the runner near those highs where I originally was. So I remember laughing at myself afterwards and just thinking, I should have just played the runner the way that I usually do. But it was getting later in the day, and I don't remember for sure what was going on that day, but I think I just decided to take it there because there was a lot of times where runners were just getting stopped out all day. And you can see it on the candles. There's a lot of sideways candles that day. And you can even see here right after that, it starts to form a pretty bearish candle. And it ends up just not being overall all that great. So I just ended it there and just called it good. Hey, for this section on the live trading examples, so just a couple of things. So basically what I do here is I try to take trades with different sizes for the purposes of showing how they play out when you're using different amounts of contracts and also using different targets, whether it's 4 ticks or 6 ticks for your scalp, and sometimes 8 ticks even. And so you'll see different ones in here, and I'll try to label what they are as we go, and I'll add to this over time. And I did some different ones just to illustrate, like, if you were only trading with 3 contracts, how that would work, or if you're only trading with 4. But for the most of these, I'm going to do 5 contracts to show for illustration purposes. Now, a lot of times, if I'm taking a trade, I might be taking a trade with 20 contracts or 25 contracts. And so obviously, that's going to be a little bit of a different setup, but it's still going to be the same thing where I exit 75 to 80% of my contracts on my scalp, and then I leave a runner. So the setup is always going to be the same style. The difference there is if I'm trading with only 3 contracts or 4 contracts, I might not do it the same way. I might actually not go for a runner. I might just take off the whole thing. And so you'll see that in some of these examples. And it's meant to show you how you can do this if you don't have a huge account to start with. And I will then add in some larger ones just so you can see how those work. And I'm going to add some over time. So this section, I'll just add new ones over time as like new modules below this module, so that you can just kind of see how those all play out. And also it'll just keep it relevant when I see different things that are interesting, since I record my screen when I trade. And so sometimes I'll just then go back and I'll do little voiceovers on these to help explain it. So I'm just going to leave it there, but enjoy the live trade examples. All right, so here's another trade where I was going for 6 ticks just to show how that looks. And what you can see here is we got this uptrend, and I'm looking to see here because there's actually a first entry short, and now I'm looking to see because it looks like we're going to get a second entry short here. And so you can see that I was starting to think we could get a trend, and I'm thinking it's going to be a failed second entry short. So you can see me getting my buy stop ready. First entry, and there's the second entry short. Now, if this turns into a bullish candle, then it's going to look like a failed second entry short, which is a perfect type of reversal after a low like this, and we start to make higher highs, higher lows. After a big downtrend like that, we could end up reversing to come up, because on typical rangy type days, a lot of times this will happen. And so I end up moving it away there because it doesn't play out. So I still am waiting. Now that is a break of the uptrend, and I am still expecting a new high here. So my theory is still intact that we could end up with a failed second entry short. And so I'm still waiting to see how this plays out, see what kind of candle we get here. And then once it starts to come up and look really bullish like this off of that level, I can drop my order 1 tick above. It's a pretty big bar, 14 ticks. So I end up dropping that down. I end up getting my 6 ticks. And then I end up actually getting ready to trail the stop here. So you can kind of see that it's moving up. I trail it up a little bit there. And then I think I was trying to go for the close, but I think it ends up coming back and stopping me out and a little bit of extra profit there. So I would have got a bigger runner had I let it play out a little further than that. But I'm okay with that because I still got a profit even on the runner there instead of it coming back and breaking me even. So that's how I played that one. Every day, you need to do a daily trade review. So as you mark up your chart throughout the day, leave everything on there. So I'm just going to put some random lines on here that aren't even going to be in the right spot. But let's just say that, this is what your chart looked like and you kind of had all these lines on there and whatnot. And let's just say like you take a trade, mark it off. So you can even do this. You can even just put a draw arrows, whatever, pointing to the trades that you took. Let's just say you took these trades as you go and just leave it on there. And at the end of the day, come back and analyze why the trades worked or didn't work and how you managed them. You can record your screen if you want, but most people aren't going to go back and watch the video. So I think it's easier just to take screenshots as you go to remember what you were doing, or just to mark it off as you go. And you can you can leave all these on there and you can then later on go, oh, I had my trend line drawn wrong and that's why the trade didn't work out. And I see that now. Because when you go back, you'll see things better than when you were trading live. Like you might see this and go, oh, I actually had the trend line drawn in the wrong spot. It was actually tighter or it was wider or flatter or whatever. Or, oh, there was actually a break and a new high and I missed that. And that's why that short didn't work or that's why that long didn't work or like whatever. You'll start to pick that up. So analyze your trades every day, and that's how you get better. The way that I do my daily chart reviews help me because I look at all the trades of the day every single day. It forces me to do it. You need to do something like that and then mark them up as screenshots. You can take a screenshot of this and have a library of your trades. You can also and if you don't take a trade, mark off the trade that you should have taken and document that as well. You can use a different color. You can write stuff on there, have notes. The daily trade reviews will make you a better trader. That I can't stress that enough. It's so important. So many people skip this. So just please do it. It improved my career immediately when I started doing daily trade reviews, and I still do them every day to this day, and they are crucial to my success. Thank you for staying through all the way to the end of the video. I really appreciate you coming through and going through the entire course. Now, if you want to learn more, join the links in the description. You can get access to my free school community and an even longer version of this course with more sections and just more comprehensive analysis and whatnot. Also, there's links to my paid community and mentorship program and everything else involved. So you can check that all out in the description. The first link will get you into the completely free school community and you can get access to that. And then you can also join our live calls and everything else that we do. And there's just so much more that we do to be able to teach people price action trading than I can even explain right here. So check it all out. And I appreciate you staying through to the end. And I will talk to you soon.